qualification A, B, C, D, like that. Just because you are fulfilling that one, you will not get that promotion. It is business policy, right? Just fulfilling the criteria doesn't mean that you are eligible, right? That you will get. You are only eligible. Eligible means you are qualified at the first level, right? If you look at the interviews and all, you got qualified, but offer won't come because the HR policy says that among the applicant you have outperformed, but according to the HR policy you got lower mark, so the interview get cancelled and it will be rescheduled. Lot of government recruitment you must have seen in the newspaper, it comes that if the people were not up to the mark, especially when it comes to professional, like a CA, CS, CMA, ACCA, law graduates, if they are coming, and the government companies, government organization HR policy is such that they need to know everything, right? They need to know everything. So in that situation, many a times they cancel also. And then wage payment, incentives and bonus are the HR policy of a business, right? Business policy has subsets: HR, marketing, quality, material, right? Research and development. Anything can be finance, anything can be brought in, but these are the some of the example which can be considered. And marketing policy, when it comes what to sell, right? Where to sell, because target, this you must have studied in the last semester. You have to target, and a focus strategy should be there. If you are not focusing, what will happen? You do not know who requires your product. So for that, what you need to do, you need to identify where is the demand, right? To whom to sell, through whom, right? Agents. And communication, when it comes to advertisements, right? And then material purchase, quality, quantity, both are required, because the quality quantity is an important element that you need to keep in mind when you are doing strategy. Because the moment you reduce the quality, the moment you compromise your quality, what is going to happen? It's going to affect your long term sustainability in the market. Then you have to see from whom you are going to buy, payment terms, right? Because lag in payments is an advantage for the company. What is a lag? Lag means delay in payment. You are buying credit purchase. On a credit purchase, if you are buying, you don't need to pay money immediately. Instead, what you will have? You will have a working capital, right? You will have a working capital. So when you more and more working capital you have, the flow of fund is a advantage. Stores and handling again is another important element when it comes to material, because many places what is happening, if you are buying just you are buying and keeping it in the godown, it requires storage cost. What is the storage cost? You have to have a rent, electricity, water facilities, security, right? All these expenses unnecessarily you are spending just because the goods are being purchased well in advance. So that's why they are calling it as a always better control we have, right? What is an always better control? You have to identify the goods into three types, right? Which are very costly, right? Very costly, and you have to keep minimum numbers. And better means it's available on an average, right? C means it is cheap products, so it is available all the time, it is available all the times. So in that case, what you have to do, what is available, you should not store. But what is costly, you have to store minimum. That is what is being talked. And then documentation, all documentations are very very important, because when you are purchasing, and what is the tax you are paying, all that is important. When documentation, when it comes, especially when it comes to transfer pricing, I believe that you must be knowing about this concept called transfer pricing. Transfer pricing is a concept when a transfer is taking place between two related enterprise. The cost should be arm's length price. What is this arm's length price? It should be at the price where you would sell it to a third party. I'll put it in a very simple example. Okay, So what is this example? I would say there are two entities, A and B are sister concern, right? This is the A limited is the brother and B limited is the sister concern. So they are, it's a family business. Now A wanted to sell something to B at 100 rupees, but A would sell to C at what price? 110 rupees. So whenever there is a inter-corporate or inter-company transfer happens, we have to make sure that these prices are at the arm's length price, ALM, right? Arm's length price should be at the market price, right? So that is what here they're talking about. So anytime if the audit comes, we will be in a problem, that we have to keep in mind. Is it changing? Is it whether the slide is changing? Evolution of business policy.
It is not changing.
No, sir. No
Okay.
changes.
Okay, 1 minute. I think I have some problem. 1 minute. Okay. So how this business policies, evolved in India? That is what we are going to talk about. So previously, when in earlier times, management were concerned with the internal business policies to guide personnel in operating the business in a more competitive manner. But now we are not worried about only internal business. We have to also look at external oriented, right? That is why I told you also in the previous class, this TOES is as equal to SWOT analysis, right? Previously, we were looking at only internal strength and weakness, but now we have to look at threat and opportunities available in the market, and then only we have to go forward. Okay, these are the gap. These are the gap, and then how we can make use of it, how we can convert the threat of the opponent into an opportunity with our weakness and our strength. So that is what here nowadays the business executives are more concerned with being externally oriented. Hence the importance of strategic management concepts are evolved in India. It is not only India, it is across the globe. Strategic management is a technique which is used by the businessman to sustain in the market with a competitor and the limitations. And this is due to the following factors why globalization is one of the element, and the second one is information and communication technology. What is this information communication technology? This we need to spend time. Once upon a time, finance is considered as a lifeblood of business, right? Finance is considered as a lifeblood, but now what is the lifeblood? Information. Finance is not a big problem. Finance is not a problem, but what is the lifeblood now? Information. Why information? Because if you have a right information about what business to start, where to start, how to start, right, who is your target audience, if you can identify, then that is what is the lifeblood. Because you know that now we have lot of finance facilities have available, provided you fulfill certain conditions, right? Mudra loan, there are so many financial institutions, right? Venture capital is available, right? There are industrial development banks are there, right? State industrial development corporation, all that is there. But what is not available now? Finance is available, but what is not available? The idea generation. what type of business, that information is not there. So this information, how we can use it, we can use club the information and communication technology as an added advantage. As the information and communication communication technology grows, business people also should advance. Because nowadays what is happening in now you go look at it, you want to start some business idea, you put I want to start some business, what is the demand in your locality, you put it in the AI, right? Chat GPT, it gives you a lot of ideas, right? Because chat GPT is giving you guidance. Now what we are doing as a businessman, if you are doing no, I will not go take any training and all those things, you are at a loss. Previously people were keeping it as their own, they will not discuss with anyone. But now there are a lot of analysts, there are a lot of research analysts who will be able to identify what kind of business you are doing from the past information, past available information. They'll be able to predict what kind of actions that you are going to do in the future. So every competitor business, right, this is I'm talking about large business entities. They do their own business, at the same time they also they also look at the competitor strategy, that is externally what is happening. If somebody is doing one decision, right, a decision of providing discount, right, immediately the other companies, the competitor companies also react to it, otherwise it will be a problem to them. India scenario during 50s, curriculum and philosophy of management education at IIM, right? During 1950s itself, we have a curriculum at the Indian Institute of Management. The philosophy of management education concept got introduced. Okay, what is the importance of business policy from the viewpoint? Why business policy is important in the business policy course here they are talking about, right? The course is important because it gives you the idea, it gives you an idea of how the strategy work, how strategy should be framed, how to predicting technology and all they are talking about. This is not that important, so we are skipping this. Strategic management framework, what is the framework? This is also we have discussed in the first class. First we need to discover what is the discovery here they are talking about, that is called as a strategic development. Business assessment, what is the business assessment? Either SWOT analysis or TOS analysis. Through SWOT or TOS, what we are going to do, we are going to identify what is the business opportunity that we have. So that is the discovery stage, discovering. And then you plan, what is the plan you have to make? Strategic formulation. What is the strategic formulation? After identifying SWOT or TOS, you will identify your limitation. What is your limitation? With respect to resources, with respect to human capital within the organization, with respect to capital also, sometimes finance also you are finding it difficult to raise. In case of public company, you have to raise capital only from the public, right? And the public, when it comes, you have this capital should be authorized in the memorandum of association under capital clause. And also that in case if you want to go beyond share capital, you will accept deposits. Then deposit they are talking about, you have a limitations, right? Acceptance of deposits under Companies Act 2013. Acceptance of deposit, it should not go beyond certain limit from the members and public, right? Members and public. So raising capital also is a problem for this one, right? Raising capital problem, and I'm referring, it is not, as I said previously, you have a limitation. You want 1 crore rupee, you're allowed to get only 30%, right? In that situation you have a limitation. That is what I'm talking about. Any implementation, translate strategy into action. Test, learn, adapt. So what is the test after implementation? Whatever learning, whether we are going as per the goal, or whether we are going towards the goal or not, that you will identify. And then you will say take corrective measures, right? Corrective steps or corrective measures in case of any deviation is found. then all these functions cannot work without the prime element. What is the prime element? That is objective, core values, all these things. So here, what they are talking about in the case of this discovery, plan, implementation, measurement, everything takes place based on the core strategy. What is the core strategy? What is your mission? What is the mission? Right? Values and vision is basically a long-term one. A long-term one. What is the mission? Nearby one. Right? What is the value? See, value is related to ethics. Value is very much related to ethics. What is the value? What is the importance for you? What is important? What is the main component for you? That needs to be that needs to be taken into account, because you have a goal to reach. There are multiple ways with which you can attain, but is it ethical to do that? So that is what here they are calling it as a values, because in a business, businessman should adopt and behave um, the values in which that he has framed. What is that here? It simply means that if you follow ethics, you should follow. If you're framing ethics values, you should you should also practice, and then you should communicate effectively to your team members, and you should make sure that they are also following. That is very very essential, because without ethics, without proper values, if you implement any strategy, that will not sustain for a long time. And then objectives and initiatives, here they are talking about what is the objective is based on all these three. So core strategy basically talks about vision, mission, and values, and based on this one, what we have to fix the objectives and initiatives. Now let us talk about what is the vision and mission statement. Mission talks about how you will get to where you want to go. So basically, vision is a long-term goal, right? Long-term goal in the sense. Now I'm asking you, in the interviews you must have seen, right? In the interview you must have seen that they will ask you, after 10 years, where do you want to see yourself? That means how this company how this company in which you are seeking for an employment will be helpful for you to reach there. That is why this question is being asked. So after 10 years, what you want to be, that is called as a vision means very long term. Sometimes you get confusion, right? Sometimes you get a confusion. So what you can do, you can put it like this. So in alphabet, M and it's visible. M and V is the last one, right? So remember like this, because many a times in the examination we make a small mistakes. Instead of vision, we write explanation for mission. So vision is the last one, where you want to reach, and how to reach. That is what is the mission. Mission is the short term goal. Mission is the short term goal, how you are going to reach. So instead of 10 years, you will work in a small company first. You will work in a small company for 2 years. After this 2 years experience, you will move to a medium firm, right? This is a medium firm where you will work for another 3 years. And at the end, what you will go after completing 5 years, you will go and apply for a bigger companies. So you will get, for sure you will get the opportunities to serve. So what is a mission statement talks about? It is where you want to be and how you will go there. How to go? It is not easy to go. If you're looking for a promotion, that is your vision. In an existing organization, you are looking for a promotion, that is your vision. How to get the promotion? You have to have some master degree, or you have to have some specialization. You have to have some software knowledge, right? Or information communication, application software that you should know. So these are the means through which you can attain your goal, a vision, that is promotion. So what is it answers? They say, what do we aim to be? And in the case of an answer, what do we do? right? And then time it comes, the statement talks about your future long term, and the mission statement talks about the present leading to its future. From here, how you are going to reach, from here, how you are going to reach, that is what is being spoken in the case of a mission statement. Function, it lists the broad goals for which the organization is formed. Its prime function is internal, to define the key measures or measures of the organization's success, and its prime audience is the leadership team and shareholders. Whereas vision statement, it lists where you see yourself some years from now, and then it inspires you to give your best. It shapes your understanding of why you are working here. And then change, in the case of a vision, it lists where you see yourself some years from now, and it inspires you to give. It's the same point. Change, when it talks about vision, doesn't change, but mission can change, because it is from here to here there is a change possibility, but from vision to vision, changing is very rare, very very rare, because when you are targeting something, you will work on that one only. So there is a, this is flexible, this is flexible, but the vision, when it comes, it is very, it is more static, more static, you can put it. Why it is static? Because vision, once you start, right, you will go, ultimately you want to reach there only. So you can take any steps. Say for example, there are UPSC aspirants are there, right? What they are supposed to do, they should go for a coaching, and then they should get training towards that one only. But what is happening, they will go temporarily, they halt in a harbor called any companies. They will join any companies, and then they will study simultaneously, and then ultimately they want to go, right? So it is, sometimes mission can change, where you are going, how you are going can change, but the ultimate reach is the constant one. Developing a statement, what kind of statement we do? So what do we want to be going forward, when do we want to reach that stage, how do we want to do it? So again, it talks about the same example which talk about, I was talking about. This is my aim, this is what I want. I want promotion, I want to be settled in a better company. What and all required? They are asking minimum 5 years experience. So 5 years experience, where to get? They want a better company, better company. To reach there, again you need a minimum experience, because nowadays every company is asking minimum experience. So when you want to have a minimum experience, without looking at the price, without looking at the salary packages, what do you need to do? You need to get the job, get yourself trained, identify your strength and weakness, and then build. But what is happening nowadays, we go in a wrong side, we fix our salary first, and then we look for a job, without knowing the SWOT, without knowing strength and weakness and opportunity and threat. We do what? We fix a salary. Sir, I will work only if my salary is 50,000 a month, 1 lakh a month, right? If you are going this way as a fresher, you will not get. But this is not the case for the experienced one. Experienced one, what they can do, they've already identified their strength and weakness. Sir, I know this software and all, I can manage, I can play the role of two functions, right? Two functionaries. So in this case, if you have to pay me only one salary, so what I wanted, whatever salary that I'm getting, I want 30% hike. That is why the growth rate in the service sectors and IT sectors is high. Service sector and IT sector is high because they are providing 30% hike from the present salary what you are getting. But this we can, this we cannot apply for the freshers, because freshers, we do not know what knowledge you have, what is practical application, we do not know. Sometimes if you look at it, the topper will not get through in the placement in the first place, right? Or I can put it like this instead. You please, I'll put it in a different way. The average students get placed in a better company because the marks and the subject knowledge is not that important. It is how you manage the situation, that is what is important in the present day context. Just because you got the topper, you cannot expect a higher salary. That is very very important element that we need to keep in mind. It is more than the theoretical knowledge, what practical knowledge that you have, that is what is demanded by the the businessman. And then future, when it comes futures of an effective statement, clarity and lack of ambiguity. Clarity should be there. If clarity is not there, how are you going to reach? That's very very difficult, right? So describing a bright future, that is a hope. Is there any possibility to reach? How to reach? And then memorable and engaging expressions, realistic aspirations, achievable alignment with the organizational values, etc., to be taken into account. Whereas in the mission statement, purpose and values of the organization. What is the purpose and values? I told you that strategies we can take. There's a very famous example is there. A father who's being very strict with a son who has taken the pencil of his friend from the school. Very simple. So father is advising the son that don't do this. I will bring the pen tomorrow from my office. So here it talks about the value. What is the value? See, when you want to tell your followers, if you want to tell your followers what is ethics and all, you should also practice. See what he is telling: when the son is bringing pencil from his friends, it's bad. It is also equally bad what he is bringing from the office, because office stationery is belongs to the office. The employees cannot have an advantage, right? So here when you talk about mission statement, value is very very important, because when you reach there to your vision, when you reach there to your vision in a shortcut method, then after reaching you will have to face a problem. What problem you will face? Everybody will tell that what is the route through which you have come and all those things. It's a problem. Okay, next one, we have already discussed. That's corporate strategy, business strategy, and functional strategy. I told you all this strategy, there must be a interconnection. What is this interconnection? When the corporate level strategy is framed, it should be communicated to the business strategy, and business strategy will talk to these people, right? Functional strategy, and again functional strategies will talk to the operating strategies, and all the reviews should go back. Then only we know this implementation problem. The implementation problem, implementation, yes, implementation difficulties can be identified or can be discussed only from the people who are going to implement. Corporate level strategy, they will say that we are going to increase the price. We are going to increase the price 25%, right? Is it okay if the corporate level strategies, if they decide 20% hike, is it okay? No, it is not okay, because they have to see what is the market condition. What is the market condition? Accordingly they have to do it. And then relationship among the corporate business and functional strategies. This is what I told you. Functional and operational, many a times it is together. It is considered as a together. And some places it is, some theories they call it as a separate one only. So it is usually considered as together only. So what business should we be in? That is what is the relationship. In the relationship strategies they are talking about, corporate strategy talks about what business we should do. And then business, it will be communicated back to the business strategy. What competitive method do we invest to achieve the competitive advantage? See, you're choosing that you want to do some business, right? Say for example, you wanted to be your target is you want to be a market leader in textile industry. You wanted to be a market leader in the industry. Now they are asking you how we can capture the market. So here you have to bring the clothes modern, fashionable one, and the price needs to be taken into account, right? If you are looking at the South India, they nowadays people in South India, they prefer the clothing, fashion style of Western, right? So now If you want to be a textile leader, you have to import the clothes or the models, the right textile models from the Western culture. So you have to design your clothes in such way. So that's why competitive method. What competitive method? We have to bring the fashionable clothes which are in demand in the in a particular place. And then functional strategy, what financial, marketing, operation and other strategies will be important to implement the business strategy. So here is simple, you can say marketing when it comes, financial when it comes, pricing is an important element. And then marketing when it comes, the advertisement is the important element. And then they are also giving the facilities for return policy, because most of the time now we are going for a online shopping, right? When you go for online shopping, we also look for what, return policy is very very important, because you are buying something, looking at the image after you purchase, you might not like it, you might not like the color, it might not suit you. All these things you are taking into account. So in that situation, you will reject that. If you reject, whatever money you are investing, it is waste only. So that is why you have to also look at what is the return policy is there or not, and what is the relationship. This is again it is going to the first stage only. These are representation only. These are representation only. Corporate level strategy and business unit strategies are framed with the help of business mission and vision, right? Vision and mission is very very important. Business vision and business mission. And then we also talk about values and goals, right? Values and goals, that is objective, business objective, goals, values, that also needs to be taken into account. These are both eyes. These both eyes, with these eyes only you will be able to see what is the opportunity that you have. With that opportunity you will go and divide the workload, right? Whatever workload you have, you will divide the workload and then implement, right? What is the information system, who is supposed to have the information system, what is the information system? You have identified one opportunity. Say for example, you have identified one opportunity of a textile business, textile business where you can buy the clothes, who is the designer, right? What is the price, lowest price you can get, all this information you got it. So you have to make sure this information is not being disseminated. So you have to protect that information within the organization. So for which you have to develop a information system within the organization. And then finance, and then research and development, marketing, manufacturing, human resources, all that is coming into the concept. Could you follow up to this? What and all we have discussed? We have discussed business policies. Okay. We have discussed so far business policies, how business policies are, effective. How business policies are effective within the organization, that is very very important. How business policies can be framed, right? So we were talking about what is the vision statement, what is the mission statement, objectives, values, goals, right? And then how we have to frame the strategy. First we have to identify, right? Identification is the identification of the opportunities, and then planning, strategic planning, implementation, and then taking corrective actions based on the vision, mission, goals, objective, all that we have discussed. Now, after this, we are going to talk about competitive positioning and value creation frontiers. Right? Value creation is a very, very important concept, but these are known to all of us in a different terms. When I explain, you will know this concept. What is this value creation frontier? This is a theory which talks about as a competitor or as a followers, right? Let us imagine you want to start a business, but there is a already market leader. There is already a market leader. There is already market leader. You are only a follower. So when you are following a competitor, what will you do? You will have to follow very closely whenever there is a small gap, right? Whenever there is a small limitation is imposed on the competitor, that you will take an advantage and you will try to lead above your competitor. So what are the things you should keep in mind? Two component they are talking about. One is differentiation. Differentiation means what? You are differentiating your product, right? That is, you can say uniqueness in the products as compared to your competitor. You'll be able to reach there. Then the major decision when you talk about the costs, right? Majority in India, major population, they look at the component of a cost rather than the uniqueness. That's true only, right? Major population is looking at the cost only. They are looking at the mobile phones. If you look at it, there are various brands. Are the population is use every population is using all the population is using the iPhone? No. So they are also looking at, yes, the cost of the a particular product A, if it is high, they go for the substitutes. So when you are looking at these substitutes, then your innovation will be very less. Your innovation will be less. The Android phone is providing all the facilities, but when it comes to data protection, when it comes to camera quality, you cannot achieve there. So that is why innovation, when it comes, it will be costly. It will be costly, but it will be unique. When you look at the cost aspects, innovation will be very very less. So this is what it talks about value creation. When the value how the value gets created, if you look at this example which I said, there are so many mobile phones are available even for 2000. For rupees 2000 you can get simple WhatsApp enabled Android phones you can get, right? Different brands are there. But when you look at the efficiency, it will be very low. It will be very low, right? That is because of the cost. When you pay more money, then what happens? The innovation. You look at the iPhone models, almost every year they are changing it. So why that is happening? Because they keep investing in the research and development. So that is why when you talk about, it is not nothing wrong. You should not look at the differentiation. When you start, you have to capture the market with the low costs. You have to capture the market with a low cost, and then gradually you have to go where you have to build your value creation. If value creation is not happening, you cannot sustain. After some time you will evade from the market. So how this value creation starts? From the efficiency to quality to reliability. And then see, initially you are buying at a low cost, and then people will go, okay, efficiency is there, okay, it is good, you are recognizing. And then you will say, see, so many years they have not increased the price, or they have increased the price, the quality is better quality we are getting. And then responsiveness to customers. When you give a complaint, right, customer satisfaction and customer complaint grievances is yet another important element. And quality as excellence. What is quality as to excellence? It so many duplicate products are available, but this product can be identified easily. The comfortness and the convenience of using a particular product, it cannot compete with any other person. So that is the quality is excellence, right? And then finally you come to the innovation as a differentiation. Either you can have higher cost, higher prices can be imposed just because of the value you have created over a period of time. So that's a very very important part. So when you are starting your company, or when you are competing with somebody, that is towards your mission, when you are going, you have to identify what is your technique, what you are going to adopt. This adoption, whether it is you are going to focus on the cost, or you're going to focus on the uniqueness, right? Uniqueness. Now we'll see what is given. This chart is very very important, because this question, when it comes competitive positioning, where you want to position yourself, you want to position yourself at the cost leadership or at the efficiency, like that. As you grow, ultimately you will come to the uniqueness. When uniqueness happens, that is innovation happens, you can charge them any price. You can charge them any price because you have the trust. Consumer loyalty and trust will be built. Value creation frontier represents the maximum amount of value that the products of different companies inside an industry can give customers at any one time by using a different business model. Companies on the value creation frontiers have the most successful strategy in a particular industry. Because if you are growing, many times what is happening, we go join a company and then uh, we go join a company and then we settle there. We don't look for the growth. What is the growth I mean here? Many a times when you join a company after studies, we don't take up any additional courses, right? What is the additional courses? Where you want to go, where you want to go? If you wanted to be a chief finance officer, what is the minimum qualification required? So we have a CFA courses available, right? Certified financial accountant course is there. So if you qualify yourself on this basis, now you are doing a HRM, right? If you are doing MBA HRM, we have PGDM, PGDM, PGDM course on HR analytics, right? HR analytics, business analytics in case of MBA finance categories. So if you are doing this kind of courses for your growth, career opportunity, you have a growth, right? So after getting job, many a time we don't get development, we don't get developed. We only work, come home, and then you go back to the work and vacation. That's it, over. We don't spend time for our growth. That is another important part we should keep in mind. So these differences we don't need to discuss this, because we are on the chart itself. I told you, just quickly go through the corporate business and functional strategy. This is a long term oriented, medium term, this is medium term, and this is short term or low. See, the framing is done. Framing or conceptualization is done at this level. It is only an implementation. They are only a mediator. These people, functional level or operating level, they are the implementing authorities. So when you are implementing something, if any problem comes, will you take responsibility? No. So that's why the risk is very low here. Risk is very high, because the person who is conceptualizing, you are communicating, further communicating, they are only implementing. So risk is not being transferred. You are only transferring the authority. So risk doesn't get transferred. So here, in the case of risk, wide range, here moderate, here low. Profit potential, here you will get only salary, right? After getting salary, whatever left over, it is belong to whom? The corporate level. The business is getting profit. Whatever profit they get, it belongs to them after paying the salary. So who gets maximum benefit? Who gets maximum risk? They're getting maximum benefit. And horizon, I have already told you, long term, medium range, and short range. And flexibility is very high. They can change. The corporate level strategy can be changed depending on the market condition, I told you. But in the case of implementation, you cannot tell. You cannot tell. Whatever is instruction that you are supposed to adopt. And cooperation required considerable, right? Because if no cooperation, you cannot implement. If no cooperation, you cannot implement. But here, cooperation is very little, because it is very clear. It is very clear what you are supposed to do. What you are supposed to do, then you don't need a cooperation. You only need to implement. That is what, nothing else. Formulation of functional level strategy, they've given some example, right? What is example? Marketing strategy means example they are talking about. You have to identify strategic gap. Now it is no more 360, now we have 760 degree, right? 760 degree. What is this? Sorry, 720 degree, sorry. So what is a 720 degree? Double the one, double, right? 360 here they are talking about internally. Strategic gap you identify internally, right? So internally, in the sense you look at only one side. 360 is this much only, right? But in the present day context, because of the AI and all, you should not look only one side. You have to look at both the sides. So that's why it is 720 degree. 720 degree means what? You should not look only forward, you should look also backward. Why backward? Because you have followers. As you are following some company, right? Big companies here, you also have small companies following you. So you should not look when you are doing the marketing strategy, right? Strategy gap, when you are identifying, you should not give any gap. If you give a gap, what will happen? Your followers will take over you and move forward, then it's a problem. And then market position and strategy, either you can be a market leader. Market leader means what? Either you are good at innovation or cost leadership, right? So either this person, you go, he is providing cheapest product with a high quality, or you go to this company, the product, the uniqueness in the product, nowhere you can find out. So that is what is considered as a market leader. Market challenger, they will challenge, right? They will challenge. What kind of challenge they will give? They will challenge by bringing the new technology. They will produce more production capacity, increased production capacity, and all those things. Market followers, market niche means you close followers. Niche is a gap. Niche is a gap. So this happens because of the close followers. Who is the close follower? These close followers will look at the gap, left by your company. That gap they will adopt, and they will take a position, right? So pioneers, close followers, late entrants. Here they have given the other examples, like finance strategy. When it comes free cash flows, what are the free cash flows that you have to identify? Economic value added. What is this economic value added? It is the difference between actual actual profit and estimated profit. Actual profit and estimated profit. What is this actual profit? Here they are talking at no pat, right? In finance you will be studying, in financial management you will be studying no pat minus estimated. No pat means what? Net operating profit after tax. That is what is the actual profit that you have got it. What is the estimated profit? Capital employed, capital employed multiplied with cost of capital, right? So what is this estimation? Now what is the capital employed? I'll tell you. Very simple example. You are investing 1 lakh rupee in a business, right? With expectation of 20% profits, right? How much profit you expect? 20,000, right? But actually you got 30,000 profits. 30,000 profit. This 10,000 difference is considered as a economic value added. Could you follow this one? What is economic value added? What is your expecting? Your expectation is based on, you are expecting, I'm investing this, right? Your capital employed is 1 lakh rupees. 1 lakh rupee, if you are investing, you are expecting how much percentage of return? 20 percentage. You are supposed to get 20%. And if you are getting the profit after tax, whatever leftover is more than what you expected, that means economically you are having a better profit or better position, financial position. So that is what here they are talking about. Asset management. Asset management, here they are talking about when you are having a working capital, liability, current asset, current liabilities, and all, how you are managing, right? And then financing of working capital, whether you're using the long term finance or short term finance, that also needs to be taken into account. Financing decision and capital structure. When you talk about capital structure, whether you are going to have equity, equity financing or debt financing. Why you need to consider these two? Because debt financing you need to pay interest compulsory interest. Whether you earn profit or not, it is immaterial, you have to pay interest. Whereas equity, dividend is an optional one. Dividend is an optional one. If you make a profit, you can give, or you can also retain. Profitability ratios are the another yet another important technique which helps you to identify what is the growth that company is having. Growth indices, risk assessment and management, tax optimization. What is a tax optimization? Look at the same example of a debt. If you are bringing debt capital, interest is tax free. Interest is a tax free. So if you want to raise your capital after establishing, if you want to raise the capital, debt components is a better option. So you can avoid the tax. You can avoid the tax. That means in the statement of finance, you will first deduct the interest, and then only you will go for paying the taxes. So interest whatever you pay, after paying interest only you have to pay tax. So that means you will show your show to the government lesser profit. That is an advantage. So with this I conclude, these are some of the strategies they have given: production strategy, logistics strategy, HR strategies and all. We'll see the remaining in the next class next week. I think Discord.
Hi, sir. Sir, is it
Yes.
possible to discuss what we can summarize this total class and what are the bullet points?
Today what we have discussed.
Correct.
Yes, I'll do that. I'll do that. Nice to know. So today what we have discussed, we have basically discussed about the business strategy, right? What is a business policy and business strategy? The business policy is basically the component or the method, components or the method through which you will reach your goal. You will reach your goals. So basically business policy talks about the value system, right? Value system through which you are going to reach your goal, right? That is what we have discussed. So why business policy is important? Because business policy will define the clear cut methodology or the technique through which you will reach your ultimate aim, right? So that is why business policy is very important. Business policy is one of the technique to forecast your future, right? Business policy defines the responsibility, what you are supposed to do, how much you are supposed to borrow, what is your limit in the case of decision making, what is your responsibility in case of non-attainment of the goal. Now most of the banking and financial industries, you have a target. If you are not achieving it according to the business policy, you have to attain so much of target is being fixed. If you are not attaining, you will be given a warning, and then you will be removed. So that is why business policy is very important. Business policy also talks about whatever happens, we have to hold on the value system which we have created. And it is also, I said, value system, it is not only creation of the value system, you should also follow, you should implement, and then you have to make efficiently communicate to the people. And then it is, you have to make sure that value system is being adopted, because value system is an essential element for the long term. If you are reaching your goal in a short term, but you will not be able to sustain. And then we have seen the difference between functional level strategy, business level strategy, and corporate level strategy. And we have also discussed the relationship, right? We have discussed the relationship. The corporate level strategy, they frame the goals, conceptualize the strategy, business idea, business policy, and all the risk is with them only. Since risk is with them, profit also with them only. Maximum profit, maximum financial benefits, they get it. And then we have seen the difference between vision and mission, right? Vision is the long term goal where you are going to reach, where you see yourself after 10 years. But what is the mission? Mission is the short term one. Short term one, the method through which you will reach, how you are going to reach, right? How much time it will take, what is your first step, what is your second step, that defines the mission strategy. And then we have also discussed about the competitive positioning. I told you competitive positioning based on the value creation frontier. Value creation frontier as a competitor or the follower, or as a follower or the market niche. You have to be very careful when you follow. You should also not give the opportunity for your followers to identify your gap, right? So that's why I said, instead of 360-degree appraisal, you have to look at 720-degree appraisal. Because if you make any gap, there are competitors who are following you, close followers. That's why they are called as a close followers. They will surpass you, then there's a problem. In the case of competitive positioning, each competitor need to identify what is your focus. If your focus is on the cost, you have to look at the reduction of the cost. When you reduce the cost, you cannot ensure the quality. When you are ensuring the quality, on the other side, uniqueness and the quality of the product, then you have to sacrifice the price. The cost will be high, because when you are looking at the quality, you have to pay higher price only. If you are looking at the lower price, you have to sacrifice on the quality. And then we have seen the different strategies, functional level strategies that we have seen: marketing strategy, financial strategy, human resource strategy, production strategies, and all. And we have discussed today two strategy: marketing and financial strategy. Marketing strategy, what is the market positioning, right? Whether you want to be a market leader, market challenger, or the market follower, or the niche, and all those things we have seen. Whereas in the case of finance, we have discussed about what is the opportunities that you have, right, to show your financial position in a better way, so that it is convincing for the investors to invest in your business. This is what we have discussed.
Thank you, sir.
Okay, thank you. See you next week.
Thank you, sir.
Thank you. I think Ashok Kumar, you have raised your hand. Can you please tell me? See, somebody asked a question, important and all. I'll tell you at the end. We'll complete the portion. I have the slides, and I will also take you through the study material. At the end of the session, last class, I will tell you the case studies, important questions, and all. We will discuss there. Thank you. See you.
Thank you, sir.
Hello.
Thank you, sir.
Hello, sir.
Hello.
Hello.
Hello. So, good morning to all of you.
Morning, ma'am.
Good morning, ma'am.
Good morning, ma'am.
Yeah,
Good morning, ma'am.
yeah.
Good morning, ma'am.
Thank you. Thanks for the response. Very good morning. You're sparing your valuable Sunday with us,
Yes, ma'am, absolutely.
of course, because we are all professionals. Sunday matters a lot for you, for your relaxation and for your family time. But fortunately, you are very much focused and you are doing your MBA and attending the classes and supporting us. Thanks a lot. And I request all of you kindly mute your mics. Unless until you wanted to speak, don't unmute, because last class yesterday we had a lot of trouble with someone. So I request all of you to mute your mics, and when you wanted to raise the hand, when you wanted to talk to the faculty, you can always unmute and speak to us. That will go smooth the going of the class and all, right? So let us start the class. Already it was delayed. So yesterday, I mean, like, you have shared with your business ethics material with all of you. The written material, have you received?
Yes.
No,
No.
ma'am, you didn't get.
Yeah, that
No,
is
ma'am, we
not
have
there
not
in your
received.
study material. Also, I've gone through your website, DD website. There also it is the material is not there. Only the syllabus is given. According to your syllabus only, I'm just trying to cover all the topics, whatever it is there. And also business ethics, you have a lot of books to follow. I'll prescribe some other books also. So for the right now, we'll cover the syllabus. The syllabus is divided into 5 units, and each unit has its own portions. So we are in the first unit only right now. So been allotted 6 hours only to cover the syllabus. So out of which one has done, and the second class today we are going to share. So we are trying to focus on the important topics only, not very detailed. We'll try to shower the topics with to make you to understand at a glance. So let me share the PPT. So today we are going to talk about, yesterday we had a given introduction about your what exactly a business and what is the ethics and what is the importance of the business ethics one has to follow. And very nicely you are all shared and your views about what exactly the ethics and all. So in context of that, in continuation with that, so now let us define exactly what is ethic and what how we can make the differentiation between the three terms: ethics, moral conduct, and business ethics. So, how it makes the difference? What makes the difference? Let us have a glance on it, and then we'll proceed further. Ethics, which is talking about it is a discipline that examines the good or bad practices within the context of moral duty. Means, see, it is a moral or ethics which are a intangible one. It is one has to follow the value system. So, which is talking about morals, means what to be done, what not to be done. That is a duty which says about our moral values and all. And it is a whether to do and what to do and when to do. That is called discipline. Now the class has to start by 10 o'clock for an example. So it is a moral responsibility of mine that I have to be get ready with the 10 o'clock and all. So it is a discipline that it has to be start by sharp 10 o'clock. So that is a thing that the discipline is something, ethics is something. Once the responsibility has been assigned to someone, so it has to be done within a proper discipline and all. So that is called ethics. Moral conduct is a behavior that is a right or a wrong. Means like we have to see that. So how this 1 hour we can make use of the quality. Unnecessary discussions are just prolonging, or we are wasting the time. So that is not a right thing, that is a wrong thing. So it is of 6 hours are more precious, more valuable for us. See, if the manager has given a task to you to complete the particular task within a time frame and all, you should know that that time frame how best you can make use of it, how can you can utilize the best use of that particular time and all. Wasting it is not a moral conduct. The behavior which says about what is a right or the wrong, that is called moral conduct and all. The next thing is about business ethics. What is the business ethics here? We are much more focused on the business ethics here. Include the practices of the behavior that are good or bad, which are related to the our business, which are related to our activities, which the practices which we are making it, which says that what is the right and what is the wrong, what has to be performed, when has to be performed, that will define us. That is called business ethics and all. That is the differentiation, the classification between these three and all. And the next thing is about what does it really mean of it. There are the two different branches of the ethics are there. One is a descriptive ethics and second one is a normative ethics. And all. Descriptive research ethics will talk about involving, describing, characterizing and studying the morality and all. So like try to understand the terms. What are the terms here? Describing, characterizing means the task has been given. So how we are going to sales task? But for an example, sales task has been given. At the end of the March 31st, you are supposed to achieve this much of the target and now. How you are going to achieve that target over all the period? 11 months you are working for it to achieve the 12th month target. What are the strategies you are trying to follow? That is called describing. Characterizing. What is the characterizing here? What features, what activities I'm trying to implement to achieve that particular target. And studying the morality. But when I'm achieving the target, when I'm planning to undertake certain activities, moral values are going to be followed. So that is called your descriptive ethics. Descriptive ethics is going to describe about how you are going to achieve, what are the features you are going to include, and what is the process you are going to follow to achieve that particular thing, right? That is called your descriptive ethics. And the next one is about your normative ethics and all. What is the normative ethics? Supplying and justifying the moral system. From where do you get this the ethics, the values, the morals and all? Where do you get? So because see, it's a human being is a blank paper. When you are taking a bath, when we are taking a bath and all, nothing is there in our mind. It is a plain paper. But certain values are going to be inherited or learned from the environment, from the people, from the parents and all. In which religion you born and brought up, which country you are born and brought up. So which taught us the value system, which taught us the morals. that what to do, what not to do, and all. So that is called supplying. Supplying means it is a learned behavior, which is a learned behavior which has a justification. Justification means this is a right means why we can call this is a right. So why it is not called as a wrong? So like that, justifying moral systems and all. So killing the human being, those who are doing the wrong things, we are punishing them. The judges, laws, courts are punishing them. What? Who made these rules and regulations? Who made this system? Because the justifying the, we are doing the giving the punishment those who have done the mistake. Means like any value system which we are, the person who, that is extreme. Just another example, a person regularly coming to the office, if it is reporting time is at 10 o'clock, he is coming consistently at 10:30, 11, 11:30 and all. So this is not the moral values which are not supposed to follow rules and regulations and all. So the manager has to take action. So what the moral values talked about him, or which is going to be learned from the organization, he first give the reminder, warning, notice, memo. In spite of that, the employee is following the same thing. He is forced to take the action against to that employee. Right? So that is justifying. Justifying means for the particular the behavior, one has responsible to take a punishment. Right? That is called your non-motive ethics and all. And the next one is from where we learn this ethics and all. What are the sources which makes her to learn these the ethical values and ethical systems and all? That the individual consciousness. Yesterday, one girl was talking about. It is our own conscious will talk about it. What to do, what not to do, how to do, what to do, and all. Individual consciousness will teach us that whether it is a right or wrong, whether it is need to be followed or not to be followed and all. Fellow, it can be done, it can be learned, the sometimes it can be learned also. Fellow workers, family, friends, and the by law and the religions of the country, profession, employer, and society at a large. See, these are all the sources from where we learned these the value system. That is what I said. When the baby is born, birth takes place, he or she is a, the infant is a plain paper. It is not learned. It is not learned and it came out. It is only things which can make him to learn the things, the value systems are by the fellow workers. I mean, those who are working in which environment you are. See, you are working in India, it's fine. If you are working in Netherlands, if you are working in Canada, so I mean the fellow, whatever the culture they have, we are supposed to learn the things. Means whatever the moral values they have, we have to follow the system based on our moral or value system and all. Family, friends, law, which are bound by the laws and regulations. These are the different sources of from where we learn the morals or the ethics and law. Ethics and the law. How it happens. Law often represents an ethical minimum. Ethics often represents a standard that exceeds the legal minimum. See here, both are going get together. We cannot separate it, because law always talks about the ethics, what to do, what not to do. If something went wrong, what is the punishable the system, otherwise one has to be paid or one has to be suffered with the pros and consequences of that particular situation and all, right? Ethics often represents a standard of exceeds a legal minimum. I mean, ethics is something beyond the law. Any person who is hanged or giving a sentence to death and all, see what will happen. So it causes like pain, but we are forced to follow the legal or law considerations and all. Right? So these usually they will overlap, they will go get together. And the next one is about making ethical judgments. What is that ethical judgments here? So here the three things are very important. Get along with each other. One is the behavior or act that has been committed. The thing is that, so for what we are actually committed, what the behavior we are supposed to do it and all, we are committed to behave in such a way. That's it. A salesperson is forced to generate the sales, achieve the targets and all. Finance department, account settlement, everything. I mean, like, we are forced to behave in a such a way. That behavior, we are committed to behave in such a way. That is maybe comes from our family or our work culture or our society, which makes us to behave in a proper way, in that a particular way. Prevailing norms of acceptability means what is acceptable in the society environment, and which makes us to behave. So that is in which society we are living. Yeah, like a Hinduism or in an Indian context or any Arabian countries or Canada or some other countries, we what makes us to learn, and what norms we are makes us to learn and to follow the system, and we have to accept according to the environment where we are living and behaving. Accordingly we have to do the certain activities and all, and comparing each other. How if it is there in an Indian contest, if it is in other country, US contest and all, what will be the pros and consequences of the particular the behavior. Value judgment and perceptions of the observer. I mean, like, see what I'm observing. So it's very stringent rules and regulations, and their work culture is different. Here the work culture is different and all. Perceptions if the different lands, different people, religions, geographically. So we have to accept, we have to follow the things and all, right? And the next thing is about three models of the management ethics are defined here. What are the three types of the management ethics are existing? One is the moral, amoral, immoral. What does it mean of these three models and all? What is the moral, immoral, and amoral? So the three models of the morality emphasis on the CSR, that is your corporate social responsibility and all. These three are actually what will happen. It's a works based on certain considerations. Components of CRS are like a corporate social. You know about the corporate social responsibility means any corporate will have a responsibility towards the society. As a part of social responsibility, they used to undertake certain activities which are socially concerned. So in that the models of the management are immoral management, amoral management, and moral management. Immoral. What is the immoral here? So the considerations when it comes to the CSR, one is the economic responsibility, second one is the legal responsibility, ethical responsibility, philanthropic responsibility, and all. Economic response completely they have to immoral means if economic responsibility they are for legal, not partially they will be followed. Immoral, highly they are responsible for economic activities when it comes to legal, moderate, and ethical and philanthropic are normal. Moral management, what is a moral? What here the says that completely we are bound to all four categories of the CSR. For example, what is the CSR? Corporate social responsibility. As a part of corporate social responsibility, all extracts of the factory, it is a chemical factory, just think of it, or it is a something a gas or something like a chemical industry and all. So as a part of social responsibility, what they are doing it, all the extracts of the factory or the plant, they are going to not going to mix it in the rivers or any land and all. They are making their own arrangements to destroy all the extracts from the particular company or the organization. Why? Because they feel that the social responsibility and not to suffer nearby area, the residents and all. They're taking certain measures, providing them the residents, providing them the educational facility, providing them the some kind of a transportation facility. See, like the people, those who are working with their companies and all, these are all comes under the moral responsibilities, moral management. So they consent with the economic activities, they are bound by the rules, and ethical responsibility means they're thinking of their people, employees, their population, environment, everything. This is not going to cause any damage to the environment. They think of in that respect perspective also. So these are all the morals are going to be this. We are now focusing on not about to. We are focusing on last one. Moral management means we are responsible for economic activities, legal responsibility, ethical. See, no one will taught us, but we have to follow, which makes us to more enlightened and which makes us to more learned behavior in the management. How do we do this? Developing moral judgment. How do we do this? What are the different sources to learn this behavior? External sources of the manager's value. External sources from where we will learn the things and religious values, philosophical values, cultural values, legal values, professional values. See, religious values means it is depends upon whether you are Christian, Hindu, Muslim, or Sikh, or Buddhism, whatever. Certain our ethos are there, our epics are there. In that, it is written that what is right, what is wrong, what is good, what is bad. So all our inheritance are the parents or our grandparents will teach us that what has to be done, what is the legal, what is the illegal, what is the value system and all. So respecting the people, respecting the elders and all like that. Religious values means which we learned or acquaint from our religious epics and all. Philosophical values means they don't believe in the ethos or they don't believe in a this thing, but still they'll have what is good or bad. Philosophical values, cultural values, from where I came from, the cultural background. Indian culture is separate from Chinese culture. Chinese culture is separate from your US culture. The cultural values from where I born and brought up, that makes the point and all. Legal values, in which country, which land geographically we are living, what are the legal systems we do follow, and we have to obey the legal values. Professional values, where do we work, and we have to respect that the value system. As I said, the Tatas, Reliance are compared with other companies, and also what the value professional value system which one has to follow and all. So these are the moral judgment from where we have to learn and we have to implement. Internal sources also we can learn to the moral values and all. What are the internal sources? Respect for the authority structure. See, if he is a younger or elder to you, once he is a manager or a boss, we are supposed to follow, obey his orders or her orders. It is not a gender, it is not the age, it is a matter of the elder. Respect the authority. Authority, sometimes young fellows are very younger age, they are attaining the bigger positions, the managerial positions and all. People will not have a very, what we can say, respect. People, subordinates, disrespect them. Why? Because, oh, he is a very young chap, why should I respect him? And all. No, no, it's not like that. Authority means boss is always a boss. Boss is always a correct. The thing is that how do we respect them? That is more important. And loyalty. Loyalty is also very much important and all. See, you should loyal to your customer, loyal to your company, loyal to your family. So you are the once they trust you, believe you, so should not leave them in a soup, right? And the conformity. Conformity means how best you could handle the things and all. Performance, how you are going to get the outcome based on your performances. Results, that is a feedback. See, once you implement the things, once you get the things done and so definitely the outcome will be the fruitful, right? So that is the thing, internal sources from where we can learn the ethics and all. Can business ethics can be taught and trained? It's absolutely no. Actually, it is learned to be.
Madam, excuse me, what is that immoral, amoral?
We are not focusing on that. That is what, yeah, that I'll tell you. Immoral and moral is actually we are focusing on the moral behavior, ethics, which is completely concentrating on the moral because which has responsible for economic. Like for an example, you are given a task to organize some event, right? In that, it is inclusive of 1 lakh budget. So 1 lakh budget, you are utilizing, bills are submitted. That is economic responsibility. Whereas in the case of immoral and moral, so you are supposed to submit the bills for 1 lakh. But how you are submitting? Whether it is genuinely or fake bills or something which is created bills and all, how you are submitting? And legal means we are supposed to submit all the events, documents and all. I'm taking an example only. But moral will give you legally what is bound to do, I'm following. But immoral and immoral, what is happening? I'm not following the terms and conditions. I'm conducting an event, but it is not abide with the rules and regulation. Moral is no one will restrict me, but I myself know that what to do, what not to do, when to be conducted, when not to be conducted. For an example, advertisements which are comes very unethical or like any wrong videos, age limits and all. They people just like that they said below 18 years you are not supposed to watch the video. It is a immoral or immoral. It is not immoral because do you know that whether he is 18 years plus or not? The website know about that? No. He'll just like that. He'll click on that. I'm plus 18 years and he will start watching the videos. That is the immoral or immoral activities. That is not illegal. But moral activities are if it is bound to 18 years means I'm just locking it, verifying the age, then only I'm allowing it. It is not allowed. There no verification, nothing is there. Just like that, if you yes or no, if yes, you just proceed to watch the video. So that is the thing. Legal responsibility, they don't follow. Ethical means by watching the social media, how many people are getting spoiled? How many people are getting, like habituated? You know this. Nowadays, every phone people used to get this jungly rummy or online games like your, blue whale. That has also created a sensation in the world countries. The game and all. Once you get inside the blue whale game and all, people started committing the suicide. Did you heard about that?
Yes, ma'am.
Did you heard about that? Yeah, that is the unethical behavior. Ethical responsibility they don't have. Means they wanted to earn the money and they wanted to not following the legal restrictions and they wanted to spoil. Their only the selfishness is to get the a profit. That's it. But the thing is that they are neither falling in line with the legal responsibility, ethical responsibility. We know that if the small kids are get addicted with these games or blue whale or whatever it is, so what will happen? The people are getting used to and getting losing the money and all. So that is not the legal, ethical aspects and all. But that is called immoral or immoral. Definitely, immoral will not have any legal or ethical responsibilities. They are the ultimate aim is to follow to get the profits, get it done and all. But whereas the moral responsibility talks about they completely 100% they'll follow the rules, ethical, legal, ethical values. Right? That is the difference. Is it clear, sir?
Very clear, ma'am. Thank you so much.
Yeah. So the next one is about can business can be the ethics can be taught and trained? No, it is see what will happen. Ethics course should not be taught. Here we are giving you to make you to realize at a glance. That is what I'm also trying to make effort, and you are also trying to do that for the past 30-35 minutes. What we are trying to do is we are trying to understand the terminology. Already you have ethical values. Already myself has certain moral values. So here nothing can be taught. It is only a part of discussion. That's it. Because so everyone individually will have their own moral and ethical values, which can be learned from your own friends, parents, atmosphere, co-workers. You are already having your own value system. But people are here. What we are trying to make it is we are trying to highlight, we are trying to discuss. These are the issues are there. So why don't we learn from following a moral values and what exactly we are doing? Is it right or not? We are trying to realize ourselves. That's it. And here, what will happen? Not offer only the best solution. See, you can ask at the end of the class and the 5th unit, you have that Gita and all. How many will you accept that what the Krishna has done is it a right or wrong? He knows, in spite of knowing all the consequences of Mahabharata, he has done this, his role he's played. So this is actually, I'm not religiously teaching and all, but it is a part of your syllabus. In the 5th unit, it is there. What are the ethical and moral values related to the Gita and all? It is not only I'm talking about the Gita. Whatever it is in a Bible or in a Quran, or we have written from where we have inherited, so that only we'll follow. So it is not, ethics cannot be taught, it is cannot be learned, it is basically inherited from the families or and the co-environment and all. That is what we can say, right? And here, can business ethics can be taught? No. So business ethics, you should know that bread and butter earning is my company, which is giving me the salary. I should not cheat my company. I should not put my company in trouble. Why? Because with this company only my bread and butter is there, my family is depending on that. So recently, I'll just give you one example. So the security who is working in our own institution, the admissions are going on. When the new parents are coming, she used to talk to the parents that, so no, nothing is, infrastructure is good enough here, so don't join your daughter or son here, you just take some other institution and all. Tell me whether it is a correct or not. Telling the facts or not the facts, she was just misguiding the parents about the wrong information. But she is a university security. Just think of it, what will happen here? Because it is a bread and butter earner is my institution, I should be loyal to my institution. What is there, I should tell. What is not there, I should tell. But I should not cook the stories, isn't it? So that is what here business ethics are also will talk about. So handling unethical, if the people are doing any unethical practices, we should know how best we can handle them, correct them, and their performances. See, sometimes 10 o'clock, they are, instead of coming 10 o'clock, they used to come at 10:15, cooking the stories. No, there is an accident, so I could not. Why? At my home, there is some emergency, that's why. One day you can tell, second day you can tell. How many days you can cook the stories? You cannot, right? That is what business ethics, professional ethics also not taught. It is a matter of realization. That's it. And ethics a moral engagement. What is that social learning theory here? Theories are more important in your ethics. That is in your syllabus. It is there. Theories of ethics. First theory talks about moral disengagement and all. In that, what we are going to focus? Social learning theory. Social learning theory is a moral reasoning translates to moral action through self-regulatory processes. You do the things that bring you to self-worth. You avoid the things that avoid self-censorship. Very simple, sir. To try to understand all of you. Here, social learning theory talks about moral action through the self-regulatory process. This only you just remember. Moral action through self-regulatory process means what my conscience says, I do that only. I do believe that only. That is, my moral or my actions are completely based on what my conscience says. For an example, so in a class of invigilation, the exam people are all writing. If the invigilator is going out, that is natural tendency that you just chit chat here and there with your friend. What is that? What is this? What is that? And all. You keep talking. That is all acceptable. If the writing the chits, keeping the slips, is it a moral? No. Isn't it? Self. What makes it a self? Like whether the invigilator is there or not there. I don't follow I will follow the regulations. I won't carry any material for the examination. This is an exam to test my knowledge. Let me know what extent I have a knowledge by which it is a score for learning. Why don't you take that as a learning? people used to carry the materials, chits, copying. No, this is a chit chatting is okay, fine. That is a human tendency. But writing on hands, writing on the maintaining the slips and all, which is a self-conscious. So one must know that what is the right and what is the wrong, right? What my conscious say it is a right, then it is a right. If my conscious say it is a wrong, try to avoid it, right? That is called a moral disengagement. And you are the decision maker. You have to disengage from your normal internal self sanctions. I mean, like sanctions to commit unethical or deviant acts and all. You are the king, you are the architect of your own behavior. Every one of us know that drinking and driving is not a acceptable thing, because it is not only damaging you, meeting an accident, it is also immoral, damaging to the third parties, those who are under innocence. So it is not a moral values and all. So the conscious will say that I'm not only spoiling myself, but I'm spoiling the others also. I'm troubling the others also. So that is a deviant acts. Better you self-realize, and we can do it unless until we realize. 4 major theories are there of a Western world of ethics here. Utilitarian theory, net benefits, which talks about rights, entitlement, justice, fairness, egoism, self-interest. So the what it says about utilitarian net benefits means whatever we are trying to do, it ultimately talks about your outcome. What I'm supposed to do, not to do, which talks about your rights. As a manager, how to control, how to monitor, how to get the work done. That is your right to get the things done. Justice. If the two conflicts arises, which is the right, what is the wrong, you can take a better decision and all. That is called justice. Fairness. In that doing the justice, don't follow any biasness. Justice should be free from the bias. It is who has done the mistake, punish him or her. Who has not done the mistake, don't punish. Right? That is called justice. Egoism. Don't show he has not given me the respect, that's why I'm failing him in the examination. No, absolutely no. Egoism, your self-interest should not come in your behavior. So that is what the ethics theory talks about it. How does it work? How does it work? What makes to work under right or wrong? So here the certain things are there. Will. First thing is, first my intention should be there. That is called will. Will is means whether to work or not to work to the company. My intention is more important. My wish is more important. That is called a will. So that will take a shape into different one. Inclination and duty. Inclination means I'm trying to achieve because it is creating interest in me to achieve certain things. Duty means as a part of my work, I have to perform, no other go. What is the outcome of this? Doing the duty with the interest is something. Doing the duty just for the duty is different. But here what we'll talk about it. So you're performing your duties with an interest. What is the outcome with that? Intended result, actual result. Yeah, actual result is something. What is your supposed to achieve? Definitely you are going to achieve. Intended result, what you are anticipated, what you are expected the results, that also you could able to achieve, right? So that is the one which makes us the theory one takes about it. Utilitarian theory. What is that? Theory number 1, which talks about famous proponents, which is Jemmy has a Bentham has proposed this theory. What makes something good or bad, right or wrong? It is the produces the greatest amount of pleasure, lack of pain for the greatest number of the people. And if I know that what I'm doing is a right or wrong, so I don't have any regret at all. I don't have any pain. See, if I'm knowingly I'm doing, it gives me a pain, right? So that is what it is says about it. I'll repeat once again. What is this utilitarian theory talks about it is, so if I know what is right and wrong, Definitely, I'll avoid the wrong things and I'll do the right things. Ultimately, as an outcome, I feel satisfied. If I'm getting the marks this much, it's okay, fine. Because I know that whatever the effort I put, this is a result has come. Fine. No pain will be there if you follow your values. And the basic principle of this is a greatest happiness principle. Means why how this happiness will come. Maximizing positive outcomes means okay, fine. Largest number of people, negative outcomes for the lowest number of people means you put your efforts, given a training program for all 100 people. Out of that, 80% of them are placed. Only 20 are not placed, and all. It gives you a satisfaction. Wow, I have put my effort. Almost 80% of them are could able to get placed and all. So self satisfaction with that, the happiness will come. One should choose the action which will lead to the greatest happiness. Means always as a human being, dear all, you remember one thing, that we should remember that we have our activities should give the happiness to the others. Our it is not that because of the happiness you are getting into the wrong ways or immoral things. No, we have to give the happiness by followed by the value system or the moral systems and all. That will give you the more happiness, right? So the next thing is what will happen. One's own pleasure and pain only count as much as the other person affected and all. See, if I had a fight with other people, whether that person will get affected or get a feel or not, I don't know. But for the fight which I made in the morning with the person, my whole day will get spoiled. What is that outcome? Is the pain. So that is what a pleasure of pain is. One has to suffer their own. The pain is not going to shared by your friend, colleague, parent. No, you have to, we have to suffer our own. So that's why try to inculcate positive thoughts and then follow the morals which makes the happy to the others, by which in return you also will get affected and with a happy. That is called happiness theory and all. In continuation of that, what will happen? Assessment is also important. Net benefits includes important indirect effects. Example, assessing effects of pollutant discharge from a factory and immediate surrounding environment and those downstream downwind from the factory. See what will happen. I know that if I'm extracting my factory outcome into the nearby residential area, people are getting the heart diseases, people are getting some health issues and all. With that, can I be happy? Definitely no. So if I'm making a proper arrangements to leave these extracts, factory extracts in a safer environment, which is not causing any damage to the nearby society, nearby residents and all, that will give me the happiness. That will give me the counts me the happiness, right? So that is the thing. Our act makes us to follow certain things. Our act will give us the rules and regulation, what to follow, what not to follow under. That is the theory of utilitarian. And act of utilitarian, how do we act? Ask the person to assess themselves. Means what I'm doing, is it correct or not? I have to judge myself. What is the right or wrong? I have to judge myself, right? And the rule of what supposed to follow in this theory is person has a set of rules we have to formulate and accordingly we have to follow. And this we have certain limitations also. What is the limit? Quantify. So for this theory will not be applicable for all the situations. We have certain restrictions and limitations, and include rights of the judge. Who is a judgmental judgment can give? Who is responsible for giving the judgments? Again, it is a questionable in this theory and all. And the examples are there. We need not to discuss about. Here and here see what makes act right or wrong, so ultimately that matters. And the theory 2, that is called a justice theory, looks at the balance of benefits and burdens distributed among the members of a group and all. See, for an example, try to understand here it is not done or performed by an individual, it is a group of people we are implementing, following and doing the things. Surgery has to be done. heart surgery, kidney implantation, something. Prime doctor will be there, along with the team of the people will be there. So they were doing their best. No doctor will intentionally kill the patient, isn't it? Right? The result of that is that the group of people, you should not blame the doctors that it has not done properly. It has intentionally you killed my patient and all. No, it is not like that. It is not nothing like that. It is a group of people working hard. They have their rules, policies, laws. According to that, they are following. They are doing justice in their treatment, what they learned. They are doing it, right? Actions are called utilitarian results and all. And if they don't agree to do the operation, it's fine because they are not confident enough to do the operation. So we are not supposed to force them. That is the justice. And in this theory of the rights, the final theory, the theory 3 talks about the rights. What is that theory? Rights talks about it. The person just claimed the entitlement. If I have a power, I can control the people. It is only talking about the rights. Who is a superior? Who is a inferior? Who is the boss? Who is the subordinates? This can be the legal right. This can be moral rights. Based on ethical standards are called as a moral rights. But defined by the system and the law are called as a legal rights. So one who have the right to implement can follow, can take the decisions and all. That is a rights theory. Not much to discuss and all. The features are rights of the others. Mean if you are the manager, only have a power to control others, right? Let the people to do equal work and treat everyone equally and give the justification or justice to all equal. But you are not supposed to show any kind of a biasness among your employees and all. For example, it is given legal right and moral right. Right to a fair trial in a United States. I mean, like if you are given like for an example, traffic rules says that whenever there is a red light, you are supposed to stop and all. Even only in the emergencies, ambulances are allowed cross the signals and all. So the moral right, what is the moral right here? That is the legal right. We are supposed to follow the legal restrictions and all, follow the traffic rules and all. Moral rights, what is the moral rights here? If I'm crossing, what will happen? If before putting the signal of the right or left hand, if I'm taking a turn, so not only I'm getting suffered, beyond that, the followers, I mean the people, those who are coming from backside also get hit. It is a moral responsibility of the mind that I have to safeguard myself and also to the others. If the passengers are supposed to be a 50 in a bus should be accommodated, 50 only better. If you are loading more and more, if it is meeting an accident, it is not a moral things, right? So that is the people are standing. You know, we see in the villages, most of the people are standing on the footboards and all. And they are meeting an accident. The bus owner is not taking any responsibility of the accidents and all. So that is not a moral. So the legal right says that you are supposed to follow this many. Few people, unfortunately, very sad to say, most of the people are, in spite of having the legal laws and all, not following the legal rules, regulations, they are getting into the immoral or immoral activities and all. That's why many things are happening. Not to comment, there are many issues are happening in the country because of not following the laws properly. And they won't add the rules, they don't add the follow the regulations and all. That's why they are bound to face the risk consequences and all. What are the rights? Usually will exercise negative rights and the positive rights. Do not interfere with another person's. And positive rights talks about a person duly help others pursue their rights, right? Those who are actually negative, do not a person from misblowing, means like, and positive co-worker helps other person, means if someone is feeling sad or not healthy and all, you are helping him positively. And if the negative is, you are punishing the person. No, don't do that. Whatever it is required, you just support the egoism. This is another theory, last theory. Famous proponents, It is a very dangerous in an organization. Ego. He is not wishing me regularly as I'm a manager, I'm his boss and all. I wanted to take a turn. Whenever the time comes, I wanted to punish him and all. That is the ego. Ego is once ego need to be satisfied. He is very close to me. He is pampering me. He is giving all the sources of the information and all. So I like him very much. I'm giving a promotions to that particular X and Y Z. No, no. Basic principle is self-interest, person doing, considering, affected by the action and all. So these are the characteristics of a ego person and all. One should action the realizes and they wanted to have an identity importance for their own personality, and which makes the more negativism in the organization. And important thing which we need to focus on is that enlightened and rational. Self-interest means you just try to classify yourself whether you are a rational person. Rational means practically. Enlightened means whether he is doing wishing or not, but he is doing his job excellently. I wanted to appreciate him. That is called enlightened behavior, right? So the what exactly your behavior says and all. Types of egoism is about individual ethical egoism, universal ethical egoism. So here the both individually some people are feels egoistic, means like they wanted self-interest, self-sustained and self what we can say they wanted to have a identity for themselves. Everyone should notice them, everyone should respect them, they have the ego. Universal means like it is can be include interest of others when assessing the others action and all. So like you are trying to assess others, that also will comes under it. And the theory says about that better you avoid, and if not there are the certain issues, the conflicts there is maybe arising in an organization and all. So here the concluding of four the theories: utilitarian theory, rights theory, justice theory and egoism. These are the four theories of your ethics or the morals. So we'll stop here and we'll continue it in the next class. About still we are behind your syllabus only in the first unit. Till now it is completed. Little faster we have to talk, and the next class onwards second, third, and we have very limited time. We'll continue it and all. So at the end of the classes only I'll be able to share the certain things, material and all. Right now I don't have the you just drop the emails, then I will share the material with you. Not now, not now. Still the classes are there. That time you can, I'll ask you your, before the end of the class, I'll ask you your emails and I'll share the test books which are downloadable form and all for the business ethics. Is it okay? Is it okay?
Yes, ma'am.
Okay. Okay.
Thank you so much.
Yeah, thank you. Thank you one and all for joining and have a patience listening. Have a nice weekend. Bye-bye.
Bye, ma'am. You too.
Good morning, students. Good afternoon.
Very good afternoon, sir.
Good afternoon.
Good afternoon, sir.
Okay, shall we start our class?
Yes.
Is screen visible to you?
Yes.
Yes. Okay. Okay, we will start our subject. This is the subject that is financial management. Anyone you say what is financial management? Anyone hear about what is finance and financial management?
To manage money.
To manage money.
Yes.
Yes, very good. And anyone else? Finance means what?
How to utilize the money in the proper way.
Yes, how to utilize the money in a proper way. Very good, very good, very good. See, here we are going to see about what is financial management. Actually, finance means the money. Without money, we can't do the business. To run the business, the money is most important one. The money may be in the form of capital, what we initially invested, and we can raise money through a lot of source. Okay, even you are a businessman, what is the source of your finance? Where you will raise your money? From where you will raise your money?
It could be from bank, it could be from lenders, it could be from
Yes,
like investors.
yes. Very good, very good, very good. Okay, we need money means we could raise from bank or from the money lenders, and if we are company means we can issue shares, we can issue debentures. Like that, we can raise money from the public, and the money is the most important thing to run the business. And the financial management is the only, it is the planning and organizing, directing and controlling the financial activities, the money and money related activities in the business, where we could raise the fund and where we could procure the fund and how the fund to be utilized in the business in a better way. Okay, that is the very important thing. That's why we are studying the financial management. And see, these are the mainly finance functions, the 4 types of finance functions. The first one is the decision is investment decision. The first decision is investment decision. You can see here, this one, the first decision. And second decision is financing decision. And third one is dividend decision. And fourth one is liquidity decision. These are the 4 decisions we can took in financial management. And we will see elaborately what are these decisions. First, we need an investment. We need a investment. The first decision is for investment, we need money. And where we could use the money. And from, for example, if you need money, you raised your money, and where you could invest that money, that is the very important thing. For example, if we raised money and invested in the machinery, or invested in land and building, or invested in any fixed assets or any long-term investment we invested, and out of that investment how much we are getting return, that is also very important thing. And we have to choose which investment is best investment. For example, you have 1 lakh rupees. Now you have 1 lakh rupees. You are running a business. You want to invest that 1 lakh rupees in your business. In which area you will prefer to invest? Anyone? If you are having 1 lakh, you want to invest in a business, in which area you will prefer?
If I'm starting a business, definitely I will segregate the money between for fixed asset or set up a factory if I'm into manufacturing business. Also, I
Yes,
will invest some money in raw materials. Also, invest some money in case of marketing or advertisement.
very good,
And
very good, very good, very good,
yeah,
very good, very good. This is the what called investment decision. I have a money, whatever money need, I got it. Now the best decision is where to invest. If we freshly started the business means I should invest in my fixed assets, and I should invest the money in capital budgeting to maintain the capital budgeting. If the business is the running business, I can use that money in working capital management. So this is the primary decision. This is the main decision where I would invest my money is the most important one. After that, the second decision is financing decision. Finance decision means from which source I could get fund. See the source. The source is very important. I need a fund, and from which source I will raise the fund. That is also very important. What are the source means? Previously we discussed. If we need money, we may go for bank loan, and we may go for any other money lenders, and we may issue shares. We may issue preference shares as well as equity shares. Otherwise, we can issue debentures, and from there is a lot of source available. And which source is best source we have to choose. That is the very important thing. Anyone please suggest which source is best? Either equity share, preference share, debenture, bank loan.
I think it would depend upon the circumstances of the business. If we are into a running business and we know that our product is good, has a good response from public, we can go for reissuing equity shares so that public would buy that share. They have that like they have that trust in a company that we could provide them dividend or something. That could be a good source. Or otherwise, if we are a new company, we would go for either lending or from banks.
Yes, yes, yes. See, very good explanation. And if finance decision, we need money. First, we should see the capital structure of the company. Capital structure means equity share, preference shares, debentures, and loan. All this must be in a proportionate ratio. For example, everything will affect the business. There must be a debt and equity mix. That mix must be optimum mix. For example, if we are issuing the debenture, means we should pay interest to the debenture holders, and our liability will be increased. And by paying the interest to the debenture holders, our profit and losses account will be affected. And second thing, if we are rising for loan, means we have to pay the interest, and it will reduce the profitability. And we issue equity shares. Suppose we issued equity shares means we need not to pay interest to anyone, but we have to pay dividend to them. That only out of profit only their share will be, their dividend share will be there. So we have to take the decision which source of finance is best. If we need long-term fund, means the debenture and equity share is best one. And out of debenture and equity share also, we have to choose which one give you best result. If more debenture means we have to pay interest. If we are issuing equity share means there will be a more number of equity shareholders. So the dividend per share will be reduced. Earning per share is also reduced. So we have to took decisions accordingly while raising the long-term fund. And for short-term fund, if you need some short-term fund for working capital means, it is very, very easy. You better to go for bank. Okay. If you are raising some short-term loan from the banks, you can get this working capital. And this is what called financial decisions. And this is very important to maintain the capital structure of the organization. And the next decision is dividend decision. Next decision is dividend decision. In this dividend decision, you see, this decision is related to profit. And we are what is dividend means? The distributed profit is called a dividend. Actually, the distributed profit is called dividend. When the company's profit is more, when the company's profit is high, you can distribute more dividend to the shareholders, then our company goodwill will be high. And this decision is very important. While taking the financial decision, it should not affect the dividend. It should not affect the dividend. That's why previously I informed you, that is, while taking the finance decision, if we issued equity shares, we issued more equity shares means it will reflect on dividend. The number of shareholders will be high, so earning per share will be less. So we have to take decision accordingly, which should not affect the dividend. And next one important decision is liquidity decision. Liquidity means in the sense that is in a solvency position. Liquidity in the sense that is in the quick solvency position. For example, if we need some urgent money, means we should maintain some liquid form of assets, that particularly associated with investment in current assets. That investment is current assets. In current assets also, the pure liquid asset is called cash and bank, and another one liquidity asset is called stock. The stock is one of the liquid assets, and bank and cash balance is pure, that is pure liquidity, means quick assets, which is called a quick asset. So while taking finance decision, we have to maintain certain liquidity fund into our business is very, very important. And this is one of the another concept, that is the goal of financial management. The goal of financial management, what should be our aim in financial management? There are two decisions we have to take. The first one is profit maximization, and second one is wealth maximization. Anyone can suggest which one is best? Profit maximization is best or wealth maximization is best?
Wealth maximization is best.
Wealth maximization is best. That means you don't want profit?
No, sir. Instead of a profit, we have to maintain some savings to long term the carry on the business. That's
Okay.
what wealth maximization is best.
Very good, very good, very good, very good. Anyone else? Your opinion?
Yes, I have an opinion. I would go for a balanced theory. It could be profit maximization and wealth
As well as
maximization.
wealth maximization.
Yes, that would secure my long-term goals as well as my short-term goals as well.
Very good, very good, very good, very good. Anyone else?
Sir, just asking, is it not, sir, wealth maximization means you're reinvesting the profit. Is that right, sir?
No, profit maximization is we are getting more profit. Our concentrate on profit only. Wealth maximization means we are giving wealth to the shareholders, the value creation. Okay, okay, okay. Very good, very good. Listen, I will explain. Another one is wealth maximization. The profit maximization is the company's pure motive is to earn more profit. And wealth maximization is the company's pure motive is to make companies wealth for long-term survival. And profit maximization is only short-term gains, but wealth maximization is for long-term value creation. And the example is, for example, any company who concentrate on profit maximization, their survival will be less in the market. When the company is concentrating on wealth maximization, they want to survive. Their motive is they want to survive in the market for a very long period. And how it is possible? You see the examples. Some products, they particularly they are maximum concentration on wealth rather than getting profit. For example, the quality of product. You see the company related to the any product, for example, the branded companies like Godrej. And the particularly that company's brand is why it is very popular means they are surviving in the market for a long term means they are concentrating on wealth rather than profit. And in company itself also, in financial decision also, if we are concentrating purely on profit means it will be give short term gain. And if you are concentrating on shareholders wealth means it will give long term gain. And profit maximization is only narrow approach, that is one kind of short term, it will cover only one limited area. And wealth maximization is the holistic approach. And profit maximization is the less flexible, and wealth maximization is more flexibility that we can change it. And profit maximization, higher risk tolerance. And wealth maximization is balanced one. We can easily balance our risk. And next, the important concept of the financial management is cost of capital. Next one of the important concept is cost of capital. And what is the cost of capital means? The cost of capital is the rate return the firms require from investment in order to increase the value of firm in the marketplace. For example, we need lot of we have lot of options to raise the fund for our companies. There are the source of capital, that is called as source of capital. There are different types of source of capital. There is different type of opportunities for that to raise the capitals. One of the sources I can issue equity shares. One of the sources I can issue the equity shares, or I can issue the preference shares. I can issue debt, or I can go for the retained earnings. These are the different sources of fund I can raise from the public. Okay, as a company, I can raise from the public. And what cost is to be written means how much return they are getting out of this investment is very important. We have to find the return on investment. For example, if I am issuing equity shares, means the public will invest on that equity shares. What will be their return? Return on equity share, investment in equity share means what it is called? The return on investment on equity shares. What you will get? Anyone is there? Hello, my voice is audible?
Yes, sir.
Yes, sir.
Suppose you are investing in a share. You are investing in a share market or anything shares. What you will get? What will be your benefit?
Profits, loss, dividends, bonuses, splits.
Yes, yes.
Margins.
The main income of investment on equity share is dividend. You will get dividend from the company. If you are buying and selling, you will get the value difference. That is assets related. The pure income of the investment on equity share is dividend. And your investment on preference share is also dividend. And if you are investing in debt, what you will get? For example, you are investing on debenture means what you will get?
Interest.
Interest. Very good, very good. If you are getting interest means the company has to pay, the business has to pay. For example, you are invested in my equity share means I have to pay dividend. If you are invested in my preference share means I have to pay preference dividend. And if I issued debenture to you means I should pay the interest. And another one source of finance is, that is very important source, that is return earning. Return earning. If I used this retained earnings as a investment means, as my capital's finance source means, I don't want to pay I don't want to pay anything to anyone. For example, I don't want to pay interest. I don't want to pay dividend out of this return earnings, because the return earning is my savings. I'm utilizing that savings for my investment means why I should pay some charge to others. So that there should not be any cost on that. But we have to calculate. We will see how the cost of capital is calculated. The computation of specific cost include, number one, we have to calculate cost on debt. Second, cost of preference shares. Third, we will study about cost of equity shares, how we will calculate cost of equity shares. And fourth, we will discuss about cost of return earnings. We have to see all these items. And first we will see cost of debt, how we will calculate the cost of debt. This is one of the practical part of the session. So you concentrate. Your concentration is most important for this session. So you see here, cost of debt. Cost of debt means I am issuing some debenture, and I issued some debenture means the buyer will buy, the investors will buy the debenture. Instead of I have to pay some interest. This is the main formula for cost of debt. KD is equal to I divided by NP. I means interest. Here I means interest, and KD means cost of capital. I means interest. NP means net proceeds. How much I invested in that. And see, if the debt is issued, if the debenture is issued, we may issue at three categories. One is at par value. Second one is at premium value. Third one is at a discount. If I issued at par means there will not be any premium or discount. So there will be face value minus issue expenses, the net proceeds. The formula for net proceed is face value. Face value means the value of debenture, how much I am issuing. And by issuing, there will be some issue expenses like that brokerage, paperwork, or some expenditure I incurred by at the time of issuing. I have to reduce that issued expenses from the face value. Then I will get my net proceed. And this is issued at par. Issued at par means what? If I am issued a debenture at rupees 100 per debenture, the debenture value is 100 means I will issue at 100, I will receive 100 rupees from you. That is at par value. And premium value means the debenture value will be high. The debenture value will be high. For example, the face value may be 100. The face value may be 100, and plus the subscriber has to pay more than that. The subscriber has to pay more than that as a premium. For example, now the subscriber has to pay 110 rupees for this debenture because it includes 10 rupees as a premium. And for discount, the concept is different. For the discount, there is a face value of 100 rupees. Then I will allow some discount for that. That means for 100 rupees face value of debenture, you should pay 90 rupees to me. But your value of debenture will be 100. Your value of debenture will be 100. But whatever the received amount, that amount is 90. You have to pay 90 rupees, but I will consider you pay 100 rupees. And at the premium means you are paying 110 rupees more than the face value you are paying, but your value of debt will be 100. Your value of debt will be 100. And the issue, you have to less the issue expenses, then we will get the net proceeds. Okay, it will be clear by seeing the problems. It will be clear by seeing the problem. See this problem. See this problem. Here, the Sakti Limited, it is a limited company, issued 20,000 debentures, 8% debentures of rupees 100 each, on 1st April 2019. The date is given, and the cost of issue was 50,000. That is the issue expenses. This 50,000 is the issue expenses. This 20,000 is number of debenture, and per debenture value is 100. And 20,000 into 100, how much the total debenture value? 20,000 into 100 means the debenture value is 20 lakhs. The debenture value is 20 lakhs. So the debenture expenses is 50,000. The company's tax, the corporate tax is there. The tax rate is 35. If tax rate is given, we have to deduct the tax. We have to consider this tax also. The 35% of tax I am paying to the government. And determine the cost of debenture before as well as after tax. If the tax is not there, before the tax, what will be the cost of debt? And after the tax, what will be the cost of debt? We have to see. If they were issued at par, if they are issuing at par and issued at premium of 10%, if issued at discount of 10%, what will be the calculation? What will be the calculation? See how we should calculate. This is the formula of cost of debt, debenture. Interest before tax divided by net proceeds into 100. For that, we have to calculate this. We are issued the debenture at par value. See, at the par value means, already I explained, the debenture value is 20 lakhs. And out of 20 lakhs, the 8% will be the interest. 20 lakhs, on 20 lakhs, 8% is 1,60,000 as interest I have to pay. And less tax, out of 1,60,000, I have to pay 35% tax. That means 56,000 is my tax value. And after paying tax value, the interest after tax will be 1,04,000. And see the next, with interest. This is the first one is with interest, with tax, and second one is without tax. Without tax, here this is after tax, and without tax, you see here, before tax, the value of interest will be 1,60,000. The value of interest will be 1,60,000, and net proceed is 19,50,000. And how this 19,50,000 net proceed is coming means, you see the gross value of debenture is 20 lakhs. Out of 20 lakhs, this 50,000 is issue expenses. You have to deduct this 50,000. Out of 20 lakhs, you reduce this 50,000, then 19 lakhs 50,000 will be our net proceeds. Actually, the cost of debenture is 20 lakhs. But I spend some expenses on issue. I have to deduct that expenses, then I will get my net proceed. My net proceed is 19 lakhs 50,000, and my interest before tax is 1,60,000. Before tax is 1,60,000. So my cost of debt will be 8.21%. The same thing after tax. You see, after tax, my interest is 1,04,000. I have to make here the interest after tax is 1,04,000, but my net proceeds will be same, 19 lakhs 50,000, so that I will get 5.33% as my cost of debt. That means before tax, I have to bear 8.21% as my cost of debt, and after tax I have to bear the cost of debt is 5.33%, because I already paid tax on that. That will be deducted from the interest. See, students, are you following?
Yes, sir.
Yes, sir.
If you are having any doubt in this concept or anything, you can ask.
Clear.
No
It is
doubts.
clear, sir.
This very clear. Okay. This is issued at par. If the same thing we issued at premium means, see, the premium 20,000 is our debt value, debenture. I issued 20,000 debenture, but my par value will be changed. Actually, my par value is 100 plus 10% debenture. That will be 10. My par value is 100. My premium value is 10. Total, the debenture value become 110. Now the debenture value is changed. You see here, 22 lakhs. Previously, we can see, the debenture value is only 20 lakhs because at par. Now, at premium means the debenture value is changed. That is 22 lakhs. And less the cost of issue. The cost of issue is same. So the net proceed will change. If you are issuing at premium means the net proceeds value will be changed. That is 21,50,000. Now the interest will be same. Interest is before tax, the interest is 1,60,000. After tax, the interest is 1,04,000. But divided by this 21,50,000, this affected by premium. So my cost of capital is decreased. See, here my cost of debenture is decreased. And at the same time, if you are issued at a discount of 10%, means here you see that is 90. 100 minus 10%, 10 rupees discount. So you will get 90. While multiplying 20,000 with 90 per value, discount value, you will get 18 lakhs. The cost of issue is same, 50,000. Then the net proceeds will be 17 lakhs 50,000. So you see the same interest before tax, the same interest after tax, but the net proceed is changed. Due to the discount, the net proceeds value is decreased. Here also you see the net proceed value is decreased, and ultimately what it happened, you see the cost of debt is increased. The cost of debt is increased. With comparison, you can see here, you can see at par value, the cost of debt is 8%, and at premium value you can see the cost of debt is 7%, that is decreased, and at discount you see the cost of debt is increased, that is 9.41. Which one is best? We can choose according to our company's positions. And next one is cost of preference shares. Cost of preference shares. Just are you having any doubt on that particular problem, cost of debt?
No, sir. Not now.
No, sir.
Clear. Now, what is the concept means? If I am issuing debenture means the cost of the debenture is interest. The cost of the debenture is interest. Next thing is, you see, cost of preference shares. Cost of preference shares. If I am issuing the preference shares to the public, otherwise I am raising money from the public by issuing preference shares. Out of issuing preference shares, I have to pay dividend. Out of issuing preference shares, I have to pay fixed preference dividend. And what is the formula for calculating the preference shares cost is dividend divided by net proceeds. Dividend divided by net proceeds. You see, this is the one of the example. A company raises preference share capital of rupees 1 lakh. The company raised the preference share capital of rupees 1 lakh by issuing 10% preference shares of 10 each. The par value is 10 each. This is at par. When the same preference shares also, we can issue at premium and we can issue at discount. If we are issuing at premium means the value of share will be 100 and the value of share will be 110. The value of share will be 110. And we are issuing at discount means the value of share will be 90. The value of share will be 90. So, see here, we are issuing the preference share of 1 lakh and issuing 10% preference shares and 10 each. Now, what will be the cost of preference shares? You see here. Out of 1 lakh, my return is, out of 1 lakh, my, excuse me. Out of this 1 lakh, out of this 1 lakh, 10% is my return. Out of 10 lakh, 1 lakh, 10% is my return, that is 10,000. I have to pay 10,000 to this preference shareholders. Now I am issuing this at premium. Now I am issuing it at premium. Now premium means how much the premium? Premium is 10%. Now the premium rate is 10%. the 10% premium is there. So the value of the preference shares will be 1,10,000. The value of preference shares will be 1,10,000. So we could easily calculate 10,000 is my dividend I am going to pay, divided by my value of preference shares, net proceed is 1,10,000. So the cost of this preference shares is 9%. The cost of this preference share is 9%. Next, if the same preference share is issued at discount, if the same preference share is issued at discount of 10%, you see the same preference share issued at 10% discount means 100 rupees share is issued at 90. 100 rupees share is issued at 90. Here see, 10,000 will be the dividend, but divided by 90,000, divided by 90,000, that is 1 lakh is my preference share, out of which 10,000 I am giving as a discount. Now you have to pay 90,000. Out of 90,000 you are getting 10,000, means your cost of capital will be more. Your cost of capital will be more. That means I have, as a company, as a business, I have to bear more cost of capital while I am issuing discount. If I am issuing at premium, means I will bear less cost of capital. Okay. And next you see the cost of equity. Like that we are seeing one by one. The first one is debenture. The cost of debenture is interest. The cost of preference shares is dividend. Whatever I am paying, that is the fixed dividend. And now you see cost of equity. What will be the cost of equity? Out of equity, what you have to pay? Equity means equity shares. Out of equity shares, what you will get?
Sir, could you please explain us the basic terminologies, because we were chemical engineers and so we have this confusion in these financial terms. Kindly explain.
Okay. Where I could start? From where?
The basic terminologies, like we don't know the equity. I mean, we have the idea, but we were in confusion of this. Three, four words.
Yes,
sir.
I will explain about this. This cost of equity means what? See, if I am a company, okay, if I am a company, I need some capital. I am a company, I need some capital to run the business. Capital means fund. Capital means money. Suppose to run my business, I need some money. What is your name? Your good name, please.
Vijay, sir.
Vijay sir. You see, if you are started a company, if you are started and running a company, you need some money. You need some money or not?
Exactly, sir.
Yeah, exactly. You need money. You need some capital to run the business. The capital is the source of finance. That is the money. As a company, corporate, as a company, the business is in different form. You see, the business may be a sole proprietorship, a single man business, and it may be a partnership firm. And if it is company, corporate means you can issue shares to public. You understand the shares?
Yes, sir.
Yes, share. Through the share market, I can issue my shares to the public. Otherwise, from the private placement also, I can issue to the public. Okay, the shares. Why we are issuing shares?
Sir, to get the investment.
Yes. To get the investment from public.
Yes.
To get the investment from public. Out of getting that money from the public, what we have to pay?
I mean, operational cost of an.
We have to share our profit to the shareholders. Whatever profit I am getting, Whatever profit I am getting, I have to pay some portion of profit to that shareholders.
Yes, sir.
Yes, yes. So whatever I am paying, that is my cost only.
Okay.
For example, I am invested in your company 1 lakh rupees. I am invested in your company 1 lakh rupees. Out of 1 lakh, you are giving me 10,000 every year.
Okay.
1 lakh out of, I am invested 1 lakh as a equity. That is called equity capital. Equity means I have equal rights in your company. I will become a owner of your company. Okay.
Okay.
That is the equity. I invested. Out of that, you are paying me 10,000. Means that 10,000 is called dividend. That 10,000 is called dividend. Yes. Suppose equity share. I am invested on equity shares in your company. You are giving me dividend out of profit. You will pay out of profit. Whatever profit you are getting, you will pay out of that.
Okay.
That may be a higher or lower accordingly. How much I invested, that is very important. If I am invested 1 lakh rupees, means you will pay me accordingly. If I am invested 10 lakhs, means you will pay more amount to me.
Okay.
Are you got it?
Yes, sir.
Yes. Suppose this capital is different nature. For example, I am invested in your equity share, means you will pay me dividend. If you need money, you can issue another instrument. There are a lot of instruments for money raising. Another one instrument is called debenture. Another one instrument is called
Debenture.
If you issued debenture, I will invest in your company some money. Out of that debenture investment, you have to pay me interest. You have to pay me
Interest.
That is compulsory. Whether you are getting profit, whether you are getting loss, however it is, you have to pay me interest at fixed rate. Okay.
Okay.
For equity, that is not compulsory. For equity means if you are getting profit, you only paying me. If you are getting loss, means I will not get.
Got it.
Clear?
Got it. Clear.
Got it? Okay. Okay.
Yes, sir.
And
Thank
another
you.
one is there. I already teach you, that is preference shares. Preference shares is also, there will be a fixed percentage of interest.
Okay.
Before equity shareholders, the preference shareholders will get money.
Okay.
Okay. So now you see, out of this investments, whatever the company is paying, that amount is called cost. That amount is called cost. Here I am going to the previous slide. You see, this slide is visible to you?
Yes, sir. Visible.
Here in this slide, I am explaining once again. You see, I issued a preference share. I issued a preference share at a discount of 10%. Now, the preference share cost is 1 lakh. The preference share cost is 1 lakh. Out of this 1 lakh, I given you discount of 10,000, 10%. Now 90,000. In your company, I will invest 90,000 only. How much I will invest? 90,000. Out of 90,000, you will give me 10,000 every year. You will give me 10,000 every year. Now, what is the percentage of cost? Out 10,000 divided by 90,000.
Yes.
11% means you are bearing in your business, you are bearing 11.11% as a cost for that investment.
Okay.
That is what called cost of capital. So we are seeing this topic, the base core concept is this.
Okay, sir.
If you are issuing debenture, what will be your cost? If you are issuing preference shares, what will be your cost? If you are issuing equity share, what will be your cost? If you are utilizing your retained earnings, what will be your cost? Okay.
Got it, sir. Now clear. Now clear.
Now it's clear? Okay,
Yes,
very
sir.
good. Very good.
Thank you.
If you are having doubt, you are welcome to us. Anyone. If you are
Sir,
not clear with the
what is
concept,
it?
is very important. Now
Sir,
you clear?
what is the IPO? Hello, sir. What is the IPO? Initial public offering and equity. Is there any difference between these two, or both are same?
Initial public offer means, for example, company is directly issuing to the public. Company is directly issuing to the public the share, that is called IPO, initial public offer. The company is first time they are issuing their equity shares to the public, that is called IPO. And IPO is also maybe a equity. Equity means only equity shares. Here equity is refers to only equity shares. There are a lot of shares. The share will be a equity share, preference share, and whatever it is. If the company is issuing the shares directly to the public means that is called IPO, initial public offer. Okay, it may be equity share, it may be preference share. Clear?
Yes, sir. Yes, sir.
Yes, yes. Another one is that the company maybe issue their shares to the mutual fund. There are a lot of way to issue through the SEBI. The SEBI is the controlling body. We have to listed our company in that, and they are issuing. That procedure is for only limited company. The private limited company, they can issue to the public directly, to anyone. For example, if I am a private limited company, I can issue my share to you also. If I am a public limited company means I can issue with security exchange. Okay, so this is the equity shares. After investing in equity shares, you will get equal right as a ownerable right in your company. Clear?
Yes,
All
sir. Yes,
clear?
sir.
Yes, yes. For this calculating
Yes,
the
sir.
equity cost of capital, there are two models. For calculating equity cost of capital, there is two model. One is Gordon's model. This model is called Gordon model of cost of capital. In this, you see this formula. RE means return on equity. RE means what? Return on equity, that is the cost of equity, and D means dividend, P means current market price of shares, plus G means growth rate. Every year the share is going to be a grow. So what is the dividend growth rate? That is called G. D means dividend. Out of investment, what we have to pay to the equity shareholder, that is called dividend. Dividend divided by current share price plus growth rate. If growth rate is there means we should mention the growth rate. This model is called Gordon
Sir,
model. Are you clear?
Sir, we don't see any change in the slides, sir.
We are not seeing any change in the slides. Now the growth approach is visible or not?
No, sir.
Excuse me. No.
Visible, sir.
It's visible?
Yes, sir.
Yes. Growth
Visible, sir.
approach or Gordon's model, cost of capital. It's visible?
Yes, sir. Visible, sir.
Yes. Very good. Now see, I am going to issue the equity shares to the public. Out of that equity shares, I will get some money from the public, and out of receiving that finance from the public, now I have to pay dividend to them. What is the cost of money? What is the amount of money I received from the public, and what is I'm going to be paid in the name of interest? Dividend divided by that share price, we will get the, for example, D. D is the dividend. Sorry, this pen is not working properly. Okay, see that we will see the problem directly. You see here, XYZ company is, this slide is visible to you all?
Yes, sir.
Yes.
Sir, no, sir. Can you please again log
Yes, sir.
and
Visible
share the
for us.
screen?
I think everything is right only. It's visible. It's visible to all?
Yeah, it's
Yes,
visible,
sir.
sir. Fine.
Yes, yes. You see,
Visible, sir.
No,
yes,
no,
you
sir.
see, this problem is very, very important problem on equity, cost of equity calculation. This is dividend capitalization model. In this, you see XYZ Limited. This is a company currently being traded at rupees 5 per share. The per share value is 5. For example, the 5 per share is 5 rupees is per value share. And just announced the dividend of rupees 50 paise per share. Out of you are investing 5 rupees in a company, you will get, how much you will get?
I pay, sir.
Are you following? You are investing 5 rupees, you are getting 50 paise out of that 5 rupees, means what will be the percentage?
0.5.
0.50. You see,
10%, sir.
10%, exactly. The dividend is 50. The dividend is 50 paise, and the share value is, you see, the share value is 5 rupees. Out of 5 rupees, the 50 paise dividend what we are paying to the equity shareholders, that is only 10%. The 10% cost of capital I am bearing. Here in this question, my cost of capital is 10%. Cost of capital is 10%. But you see in the question continuation, they are given, what is the growth rate they are given? You see in this question,
2%.
growth rate is 2%. 10% is my cost of capital. 10% is my cost of capital. Growth rate is 2%. So totally I will get the cost of capital of on equity is how much I will get?
12%.
12%.
12%.
If you are investing 5 rupees in a company, you are getting 50 paisa as a dividend, means that is 10%. 10% you are getting. From the company point of view, I have to pay cost of 10% to you. If there is growth rate means, I have to bear 2% more on that equity share capital. So my total cost of equity will be 12%. Now you got it? You are having any doubt?
No, sir.
No. Clear. Very good. Now you see cost of equity. There is another model also. You are having next class?
At 2 o'clock, sir.
2 o'clock. Okay. 2 o'clock you are having another class.
Yes, sir.
Okay. And up to
So,
2
1 hour
o'clock
gap.
we will continue.
Yeah, okay, sir.
Okay, sir.
Yes. Yes. You just 5 minutes. I will pause.
Excuse me, sir.
We have 1 hour gap now. The next class will commence on 2 o'clock now.
ভাত খাবি? দাঁড়া আমি একটু খেয়ে এসে আবার তোকে খেতে দেবো।
Yes, we will continue.
Yes, sir.
Okay, now my screen is visible to you.
Yes, sir.
Visible, sir. Visible.
Yes. Up to this, we have completed. Okay. Now you see, we have completed up to the cost of equity. This method is called Gordon model, and next one method is there. That method is called CAPM. What is this method is called? CAPM, Capital Assets Pricing Model. See, the capital assets pricing model, there is a formula. There is a formula. The formula is called cost of equity equal to RF plus B within bracket RM minus RF. Can you mute your mic? Who is that? Ashok Kumar. Ashok Kumar, shall you mute your mic? Now the screen is visible to you?
Yes, sir.
Yes, sir.
Loading page.
Yes.
Yeah, visible.
Now you see, we are now going to see about the CAPM model. That means capital assets pricing model. That is capital assets pricing model. In this model, you have to remember this formula. This formula is very important. This formula is very important. And note it down, this formula. For cost of equity, you have to calculate RF. RF means risk-free rate. RF means risk-free rate. Then B. B means beta. B means beta calculation. Here you can identify. And RM means that is market return. What will be the market return on my share? First, we will calculate the risk-free return. What risk-free rate? What is risk-free? Anyone? Anyone, you can say what is risk-free?
No loss.
No idea?
Without loss.
Without? Anyone can explain what is the risk-free rate? No? The screen is visible. My voice is audible.
Yes, sir. Yeah.
Yes. Okay. See, I will explain what is the risk-free rate means. There will not be any risk of reducing the return rate. Whatever rate promised by the person, and we will get the same return. For example, Indian government bond. There is one investment, government bond. You hear about government bonds?
Yes, sir.
If you invested in government bond means you will get some return of fixed interest. There may be the interest of 11% or 12% something. That interest is risk-free. You will get definitely that interest. That type of return is called risk-free return. So here the capital assets pricing model, we have to calculate with risk-free rate. There is a rate, whether there is equity means always risk, you know. Equity means always risk, but there is some part of risk-free also. What is that percentage? We should identify that percentage. We have to calculate like this. What is the risk-free return? Risk-free RF plus there is a beta value. That beta value is the risk. That beta value will intimate risk. Within bracket RM. RM means market return. What is the market return for that investment? And RF means risk-free return. The same RF. Like that, we have to calculate the capital value of equity by using CAPM method. That is capital assets pricing model. Here you can see, this is usually visible, the capital assets model. See the risk-free government bond yield 7%. The beta value is 0.86, and the Nifty is market rate. The Nifty is market. Actually, Nifty is market. Beta is risk. The government bond is riskless rate. By using this all three, you can put in this formula. The 7% is RF, risk-free return. The 7% is risk-free return, RF. And 0.86 is beta value. And 12% is market value. By calculating this, you will get 11.3%. Approximately, that is 11% will be your cost on equity on CAPM method. And you are having any doubt in the CAPM method? Anyone? If you are asking doubt means I can explain more on this topic.
Sir, one second, sir. Repeat, sir.
See, it is one of the method of calculating the cost of equity. How much I will incur on my equity share. Here, the most important thing is this formula, the CAPM formula. The CAPM formula, it considers the risk on return. It considers the risk on return. First, you see the RF. The RF indicates the risk-free return. What are the return? What will be the return I will get in future? That return is promised. There is no risk. There is no risk. That return is promised. That is called RF, like a government bond. And B is the beta value. That shows the percentage of risk. That shows the percentage of risk. That may be a systematic risk or unsystematic risk. But B is the beta value. It shows the risk. And RM. RM means the market value. What is the market value of that equity share? What will be the market value of that equity? The market value may be in SEBI. You may see the Sensex and Nifty. You hear about Sensex and Nifty?
Yes, sir.
Yes, the Sensex and Nifty also giving the value of equity shares. That value is called market value. That value is called market value and market return. We have to put all these three things into the formula RF plus beta value within bracket RM minus risk, market value minus risk-free return. Then we will get the percentage of cost of capital under CAPM method. Clear?
Yes, sir.
Yes. Now we are already what we have seen. The first we have seen about the debt. What is the return on debt? What is the return on preference shares? What is the return on equity shares? What is the return? And equity shares also we have seen two types. What is the Gordon model? What is CAPM method? And now we have to see about what is retained earnings and how much we should invest and what is the cost of capital on retained earnings. What is retained earning means? The name itself there. What is earnings? Earnings means
Profit.
earning means income. Okay, profit. And retain means
Leftover profit.
retained. Retained meaning
Gained.
I kept with me. That is retained. I'm correct?
Kept the returns.
Yes. Kept with me. That is what called retain. That means that totally you see the concept out of entire earnings, whatever the profit earned by the business entity, they have to distribute all the profit to whom?
Shareholders.
Equity shareholders. They have to distribute all the profit to equity shareholders. If they are go on distributing all the profit to equity shareholders means the company will face some problem. So what the company is doing, they will not give all the earnings to the shareholders, but they will retain some amount for their future needs. That is called savings. For example, we are saving ourselves. Whatever we are earnings, we will not spend all the things. We will save some amount. That save portion of profit is called retained earnings. Clear?
Yes, sir.
Yes. Now, as for example, in our ordinary life, in your day-to-day life, why you are making savings? What is the need of savings?
For the future, sir.
Yes,
For
for
future
the
needs.
future needs, future uncertainties. If there is any future need uncertainty means why I should borrow from others? Why I should borrow from others? I can use my savings. Like that, here we need finance. We need finance. For needing the finance, the first I can issue debenture, I can rise from the loan, I can rise from the money lenders, I can rise from the issuing preference shares, I can rise fund from the equity shares. But if there is my savings, if I am keeping some savings means I can utilize that fund. Why I should go for others to ask some money on debt? So this return earnings also I can reinvest in my business. If I am using this return earning also, there will be some cost. There will be some cost. For example, this is the retained earnings cost of capital formula. You just note it down. KR means cost of retained earnings. And KE means, what is KE? Previously we have seen cost of equity. KE means cost of equity. And 1 minus T. T here tax rate, and F flotation cost. It may be a brokerage or commission, whatever we are paying, that is called flotation charge. And next slide, you see this. This is the illustration. This is the illustration. You see, cost of equity of a government, for cost of equity of a company is 20%. Cost of equity. Cost of equity is given in the question. For calculating cost of return earnings, we must know what is cost of equity. The cost of equity is 20%. Rate of flotation cost is 5%. The rate of flotation cost is 5%. Rate of personal income tax is 30%. So calculate the cost of retained earnings. So cost of retained earnings. If we put all the information into this formula, then we will get the cost of retained earning. The 20, here you see this 20 is the cost of capital that is given in the question, cost of equity. And again the 30, this 30 is 30% tax. This 0.30 indicate that is 30% of tax, this 30% tax. And 0.050 is, you see, flotation cost. The flotation cost is 5%. So after calculating all this, you will get the cost of retained earning is 13.3%. And next, this is the very important thing. The cost of capitals, the last topic is this, that is weighted average cost of capital. That is called what? Weighted average cost of capital. Anyone, you can say what are the costs we have seen previously? Cost of capital, what are the cost of capital we have seen? Can you list out? Anyone?
Cost of preferential shares, cost of
Cost of
equity,
preference shares, very good. Cost of equity shares. Then
cost of retained
then
earnings,
what?
retained earnings.
Yes, see, this screen is visible.
Yes.
Here I am underlining, you see, the shares we have seen, preferred shares we have seen, debt we have seen, and retained earnings also we have seen. All this cost of capital collectively we are making means that is called weighted average cost of capital. See this formula. The weighted cost of capital means the weighted cost of capital. WACC means short form of weighted capital cost of capital means cost of equity plus cost of debt plus cost of preference shares. All this collectively there will be some cost. That cost is called weighted average cost of capital. So how we will calculate? You see this problem. From this problem you can understand easily. In this problem you can see this, the source of fund is given. In this problem you can see this, the source of fund is given and book value of that fund is also given and market value of that fund is also given. Market value is also given and after tax the percentage is also given. See, equity share capital is 45,000. Preference share capital is 10,000, the book value. Debenture value is 30,000. Return earning value is 15,000. This book value is given in the question. That means whatever the company issued and raised as a fund, that fund portion is given. Now you see the answer. Now you can see the answer. First, total all the amount of fund, all the amounts book value. Whatever the amount of book value, the first 45,000, 10,000, 30,000, 15,000. The total it is comes 1 lakh. The total it comes 1 lakh. Out of this 1 lakh, what is the portion of 45,000? What is the portion of 45,000? If you are taking this means the portion of 45,000 is 4.5, 0.4.5. And next you can see the portion of preference share capital is 0.10. And next the portion of debenture is 0.30. The proportion of retained earning is 0.15. So first we have to make this proportion. This proportion is called weight. This proportion is called weight. And multiply this proportion with tax. There is a tax even. We have to pay the tax for that. Whatever the cost is there, we have to pay tax for that. If you multiply weight with the tax, then you will get weighted cost. The total of this here 11.65 is our weighted average cost of capital. Now you understand this? You are having any doubt on this weighted average cost? Yes.
Sir, can you show the previous slide once?
Yes. See this previous slide. This is weighted average cost of capital. That is the total of all the cost of capitals. What we already calculated. We are calculated cost of equity, cost of debt, and preferred stock. And all this collectively called, the total amount is called weighted average cost of capital. Clear?
Yes, sir. Yes.
Yes. That is the same thing mentioned in here also. See, this weighted cost is for all the shares. For example, equity share capital, what is the cost of capital? 6.30. For equity share capital, weighted cost is 6.30. Preference share capital weighted cost is 1. Debenture weighted cost is 2.40. Retained earning weighted cost is 1.95. All this total, you see, all the total is 11.65. So this 11.65 is weighted average cost of capital. Now clear? If you are having any doubt, you are welcome to ask. Everyone clear with this concept?
Sir, how the that, figure in weightage is obtained?
How this weightage is obtained means the proportion. The proportion is give the weightage. For example, what is the total of all the capitals? Book value?
1 lakh.
1 lakh. Out of 1 lakh, what is the value of equity shares? 45,000 divided by 1 lakh. You see here, the 45,000 is value. Out of 45,000 divided by 1 lakh, what is the proportion?
0.45.
0.45. That 0.45 is the weight. Clear?
That into that tax.
That will be multiplied with tax. 14 into 0.45.
It's equal to 6.3.
Yes, is equal to 6 points. You multiply it. You multiply it, you will getting or not?
Okay, sir.
Now you got it?
Okay. Sir, why the market value is given?
Why?
Market value is given now.
Yes, we have to calculate separately. We have to calculate weighted average of cost for book value and market value also. You see the question itself they are given. Calculate first using the book value, and after that calculate with the using of market value. First we calculated this with book value. Okay, this problem is with book value. You see now that then another slide. This slide is visible.
Okay.
Now you see we have both the calculation. This is visible.
Okay.
Yes, this is called book value. This is called book value, and the same operation, the same thing we done on market value also. While calculating market value, the weighted average cost is 12%. By calculating book value, the weighted average cost is 11. Clear?
Yes.
Yes. This is what called weighted average cost of capital. Why there is no market value for retained earnings? You are observing the question. You see there is no market value for retained earnings. Why?
Don't know, sir.
Why? Because we are not marketing the retained earnings. Retained earnings within us, that is my savings.
Yeah, okay.
Retained earning is my savings. But debenture I can market, preference share I can market, equity share I can market, there will be a value. But for retained earnings, there will not be any market value. Okay, clear?
Yes, sir.
Yes, sir. Now we clear with all this concept?
Yes, sir.
Shall we wind up this class?
Okay, sir.
Sure.
Yes, sir. Can you please share this PPT with us?
Yes, sure. I will share. Definitely. Anyone having any doubt?
No doubt, sir.
No doubt.
Are you understand the class?
Yes, sir.
Yes, sir.
Yes. Okay. Okay, thank you. We will see in the next class.
Thank you, sir. Thank you so much, sir.
Thank you, sir.
Thank you. Thank you, dear. Thank you.
Hi, good afternoon, all. Strategic Management, Mr. Kumaraguru.
Good afternoon.
Okay.
Good afternoon.
Good afternoon. We'll continue from where we left. So, morning we were talking about the two, how to formulate the functional strategy, especially when we discussed about marketing and the finance strategy. And when it comes to this HR strategy, so what kind of strategy we can adopt, assessing the current HR capacity. What is this capacity here they're talking about? What is the need? Basically this both the points are very similar, right? Current HR capacity, what we have and how much do we need in the future, right? So this is what is also called as gap analysis. That means what is this uh, demand we have, right? What supply we have, and the difference is considered as a gap. And this gap is also assessing the current HR capacity. And forecasting HR requirements is a planning, human resource planning. In HRM you must have discussed this topic. Developing HR strategies to support the strategies of the organization. Restructuring strategies, what is this restructuring strategies? If the employees who have been working for a long time, and in case of any promotional measures, right, promotion and all, if you are planning, then internal restructuring you will do, right, within the organization. Then first you have to do before going for the recruitment. Before going for the recruitment, what we have to do, we have to do the restructuring within the organization, because without which, if you are bringing, what will happen, there will be distractions, right, among the employees. Training, development strategies and compensation, this is in relation to this point only. There is a competent person is there, but he is not he is eligible but he is not qualified. So you can give them the training, development, and then you can promote them, right? Recruitment strategies, outsourcing, and then collaboration strategies, retention strategies. All these are some of the HR strategies for some of the strategies which are used for HR strategies. And production strategies, here this is we have seen in the case of differentiation, right? Differentiation strategies. So here, whether you are going for a differentiation with respect to market segment or cost leadership. And then competition priorities based on the price. You are competing with what? Your competitor's product, you are competing with respect to price or quality or delivery, product miss, service, eco-friendly product. Because nowadays, environmental friendly products, right? That is green bond is one of the example we can put, or the some of the example which are considered a good companies, right? And competition advantage, flexible response or low cost. And logistic strategies, when it comes logistic, again they are talking about how you are going to you know how you are going to manage the logistics, because logistics is also another important variable which needs to be considered, because it might increase your costs, which might increase your cost in this one, right? In marketing management there is a concept, the seller, right? Seller and a selling place is a key variable, right? The selling place is always at the seller place, right? So the delivery, it is even in the sale of goods act, we have a concept when the seller makes the product at a deliverable state, at a deliverable state, then it is the responsibility of the buyer to take the delivery, not the seller. So buyer should apply for delivery. Then the seller's duty to make the goods at a deliverable state. That's it, right? So if you are making logistic strategy with respect to delivery or with respect to your buying, right? Both you need to take into consideration, right? So here, logistics, there are two types of logistic strategy: market-oriented logistic strategy, which provides high value-added products or services to particular client, pay attention to communication, form long-term cooperative relationship with the customers and logistic partners, right? Customers and logistic partner. So whether you are yourself is going to deliver or you are taking the help of the partner, right? If you're taking the partner, you have to provide proper communication. We take example of this one, Amazon. Amazon is not making delivery on its own, right? Sometimes they send it through a delivery agents like a post office, courier, and all those things. So when they have to give the proper communication not only to the delivery person but also to the customer that the goods are being in a deliverable state and goods are out for delivery, this proper communication should also be made. Cost-oriented logistic strategy talks about the purpose of this logistic strategy is to offer low price. What is this low price? Instead of sending a product can be sent from Delhi to um, oh sorry Delhi to Andhra Pradesh, or Andhra Pradesh to Andhra Pradesh, right? Amazon company, if you look at it, a product what you are demanding, it is available from Delhi also, it is available within the state also. So the Amazon will make a arrangement from AP to AP, so the logistic can be reduced, the cost of logistic can be reduced. So these are the we are going towards the second chapter. First chapter is getting over from this unit, and we are moving on to the second chapter, which talks about mainly about the strategic techniques, right? Strategic techniques. The first technique, when it comes, it is called as a situation analysis. Situational analysis. So what is a situational analysis? You have to look at the situation. What are the situation in a market condition? In a market condition, in a given condition, what are all the situation that you might have to encounter? So macroeconomic factors, you have to consider the macroeconomic factors. What is this macroeconomic factors? You have to look at the economy, how the economy, whether economy is in the growing or downward or stagnant, you have to look at it. Because if the economy itself is in declining, survival is become very difficult. And then government, you have to see the government is in support of the trade. Government is in support of trade and trade practices, or they keep changing. Government also keep changing, and there's a lot of problem among the government, right? So ministries, then it is a problem. And you have to also look at the law. The law, when it comes frequent amendments creates a problem for the traders, right? You take example, in 2017 we had GST, and we also had after this we also had insolvency bankruptcy code, right? IBC. And then there's a lot of amendments also keep happening. So when amendments keep happening, what will happen? 2013 we had, and which came into force, Companies Act, right? See, this all this related to companies only, right? Companies only. So now what is happening? Frequently law is keeping amended, and it creates a confusion, right? And technology advancement, ecological. So situation, in the given situation, when the economy is changing or government is changing, law is changing, how you have to react. Market analysis, you have to look at what is the market size. If the market size is declining, it's a bad sign for you. it's a bad sign for you, then you have to implement a new strategy. What strategy? Either you have to go for the exportation, right? Exportation, or you have to control the production. You have to control the production, right? If the market size is reducing, you take example of especially some countries. China is facing a problem now, right? China is facing a problem that because now adult age, after 15-20 years, the adult population is at a risk, right, as compared to India. So a country will be considered, a good country based on the population only, based on the population. And that to population, majority should be where? Majority should be adult. The countries, when we are not talking about, when we are worried about the when you are not planning for the population, is a problem. So that's why in some of the countries, government is giving facilities. What facilities? Maintenance expenses will be borne by the government, like a France and all. If you take example, for kids, maintenance expenses will be paid. And then market trend, you have to look at it. And then market profitability, distribution channels, key success factors, you have to look at it. So after these two, you have to look at the SWOT analysis. What is SWOT analysis? I told you, uh, strength weakness of the internal, opportunity and threat of external, that you are going to check. And the last one, you are going to check about consumer analysis. What is the consumer analysis? Size of the market, demographic, right? Demographic, if you say gender, you will have to look at it. Gender, their income capacity, right? That is earning capacity, their job profile, all that you have to look at it. And then buying profile, and buying motivation, purchasing practices. So after situation analysis, we are going to talk about SWOT analysis and TOES analysis. This strength, SWOT and TOES we have discussed, but they've given some example. What is the example they've given? Strength example, if you look at it, you have to have the thorough knowledge. What knowledge you have to have? Our competitors are pushing boxes, but we know systems, networks, programming, and data management, right? So if your competitor is your competitor is having the market leadership, but what are your strengths? You know the systems, you know the network programming and data management, so that are your strength. And then relationship selling, we get to know our customers one by one. When you are selling, you take example of this one. Those who are in the IT field, you must have heard, if you are in the if you or your friends are working in the IT field, what they do, they work for a US client, and then they work for quite some time, and then they go for a off-site to US, right? Off-site, and they build a network and relationship, and then come back. They start on their own, right? It is because they get to know their strength. Yes, they build the relationship, and they convince their client that you'll be able to manage even in the future, right? So that is what is called as a relationship building or relationship selling. History, we have been in our town forever. We have the loyalty of our customers and vendors. What are all the weakness? Yes, because I am the newcomer and I'm going to start only now, the cost will be high, right? A volume will be less, cost will be high. So these you can compensate only in the long run, brand power, we cannot match the competitors full page advertising in the Sunday paper. We don't have the national brand name, because I told you that you are a newcomer. So brand is a big question. That is a weakness. How you can overcome this one? How you can overcome? You can make loyalty. You can make customer loyalty and uniqueness, right? Uniqueness in the product. What are the opportunities you have? You have the opportunity. Yes, you can make the training and services, so you can convert them. And what are the threats? The larger price oriented store, right? When they advertise low price in the newspaper, our customer think we are not giving them good values. So cost is important, brand is important in the eyes of the customers. The computer as appliance, volume buying of computers as products in boxes. People think they need our services less. And they've also given this example that strength and weakness matching, strength and opportunity, right? These two are internal, right? Look at this internal, these are external factors. When you club strength and a weakness, what is happening? Strength and opportunity, it is maximizing, right? Maximizing strategy, because you have an opportunity, you have the strength, both are matched, very good, it is considered very good. When you have a weakness but you have an opportunity, what is the weakness? Let's say for example, you don't have a certain qualification, only by qualification, by qualifying certain courses, you are eligible to get the promotion. So weakness can be converted into opportunity. Strength and threat. Strength is internal. What is a threat? Threat is an external, right? You have to be bit careful, this is dangerous, why it is dangerous? Weakness and threat, you are neither taking care of your internal weakness, and external threat is also there, that is dangerous. So if you look at it, strength and opportunities are the very good sign, weakness and threats are dangerous sign, and weakness and opportunities are the good, right? It can be converted. Here you have to be bit careful. And the comparison between SWOT analysis and TOES analysis, as I told you in the morning, SWOT initially, the traditional theory talks about, first you talk about the internal, right? Take care of internal before going to the external. But nowadays, in the competition, they're talking about threat and opportunities of the external. First you identify identify the externalities, and then you take the decisions, right? So here when you talk about strength and weakness of the internal before going to the opportunities and threat. But in the case of TOES analysis, first you identify the threat and opportunity, and then move forward for the opportunities. So here this similar provision only, strength and opportunities when are clubbed, it is considered as a very good. Weakness and threat, very bad. This is good, or it is, you can consider it as an opportunity, provided if you convert, it becomes an opportunity. But threat, strength you have, but you also have a threat. That means short term, in a short term the strength is good. If you are not able to capture, then the big threat will come, right? That is very important. Somebody has raised a hand. Anil Kumar sir, you have any doubt? Strategic management is not a sum paper, but sometimes they ask you problem also in the case studies, and you have asked at the right time this question. Look at this particular question. PERT and CPM. CPM is a critical path method, right? It is called as a critical path method. PERT is a project evaluation and review technique. Evaluation and review technique. Now, if you look at it, it is called as a PERT. What is a critical path? Critical path method, CPM, right? So what is this network? This is what is called as a network techniques. Oh, sorry, this is a mistake. Network techniques. Now, network techniques, there are two types. One is CPM, other one is PERT. So far what we have discussed? We have discussed situational analysis, right? Where we discussed about macroeconomic, market analysis, consumer analysis, SWOT analysis. Second one we have discussed about SWOT, and third one we discussed about the TOES, and the fourth one we are discussing about the network techniques. techniques, right? What is this network techniques? We are going to plan. We are going to
Not
plan.
seen.
Sorry?
Not seen.
Presentation is gone.
No, I'm not getting your. Can you please repeat?
PPT
Not
is not
visible.
visible, sir.
PPT is not visible.
No, your voice is breaking.
Sir, presentation
PPT
is
is
not.
not receiving, sir.
My voice is not audible.
No, PPT is not
PPT is
receiving,
not
not showing,
visible.
sir.
PPT is not moving.
Not showing, sir.
Not visible, not visible. Not visible in the screen.
Okay, 1 minute. Let me stop it and Discord. Just give me a minute. Just give me a minute.
Hello.
Started. Everybody started.
Can someone respond? Is it visible to you? Okay.
Yes,
Okay.
Yes,
Thank you.
sir.
Thank you. Thank you. Okay. This basically this network technique is a important a technique which is used for critical time analysis. Why it is called as a critical
Sir,
time
it's
analysis?
gone.
This is what is also called as path analysis,
And again, same
right?
message.
It is also called as. Sorry, it's gone.
Yes, right.
Oh my God.
It's visible. It's
So for me, it
visible.
is visible in the.
It's okay, sir. It's okay.
It's visible for me.
This.
It's okay, visible.
Oh, no. Okay. Okay. So why it is also called as a path analysis? Now what we are going to do, we are going to talk about the path. What is the path? This is one activity. This is second activity. This is third activity, and fourth and fifth goes like this. So this is dependency. It is also called as dependency analysis. So how much time does it require? Does it require to start the event before a particular event? So 1 to 2, it requires 1 week time. That is 7 days. 2. So that is why it is also called as path analysis. In the path analysis, what we are trying to do, we are trying to
Sir, voice is breaking.
identify the path, the longest.
Not audible, sir.
So your voice is not audible.
Sir, your voice is not audible, sir.
Sir, neither it is audible nor it is visible.
Am I audible now?
You are audible, but PPT is not.
Yes, sir.
Okay, 1 minute, 1 minute. Let me reconnect. Sorry for this technical issues. Let me reconnect. It's a very important topic. Yeah. Yeah, I'll repeat. I'll repeat this technique, network technique. I will repeat. Is it visible and am I audible to everyone?
Yes.
Okay, thank you. So this part I told you, it is a project evaluation and review technique. Right, it is also called as a project evaluation and review technique, short form only. This other one is critical path. What is this critical path? These both are called as a network diagram or network analysis technique. Network analysis or network technique or network analysis. It is also called as path analysis. Why it is called as a path analysis? It analyzes the path. What is the path? If you are starting one event, say for example, you want to start a company. To start a company, what and all steps you need to have? You need to reserve the name. Right? And this has a validity. It takes 30 days. Say for example, it takes 30 days to 3 months. So after this, what you have to do by this time, you have to get ready with the memorandum, licensing, articles of association, right? Capital raising, all that you will do. So for each activity, you require time period. So you have a path like it goes like this: 1, 2, 3 simultaneously. Once you reserve the name, you have to get ready with the document, and also you have to get ready with the documentation procedures, right? Submission and all, and both needs to be submitted to MCA portal. Fourth event, fifth event requires you have to issue management here basically talks about issue of securities to the public, minimum subscription. So here each event requires a time period to be fulfilled. Say for example, it requires 3 months, 90 days, it requires 1 month. So like that. So there are 2-3 paths which goes right. This way there is one path, this way there is another path, and in this path, whichever path has the highest time, it is called as a critical path. What is this project evaluation review technique, which consider each event as a three element? What are these elements? You have either optimistic time or pessimistic time or most likely event, right? So when you are starting a work, you will expect work to be done within stipulated time. Major time, it doesn't happen. So it may be in your favor, or it may be against your favor, or it might be average. So that is why this project evaluation technique has the three time dimensions. In the case of critical path, only one dimension is there, right? And let us discuss about this network diagram. This is an introduction what I am talking about. Let us discuss this, and we have some problem that I've kept it after this slide. We will also try to solve that problem. PERT is a project management technique used to manage uncertain activities. Why uncertain activity? This PERT was initially used in the case of this one, what you call military operations, right? In the case of military operation, because each military operation is considered as a project. In this project, what happened? You will go to the the particular place, the war place, and you have to plan properly and take sufficient resources. And once you go there, you cannot come back and take additional things, right? And during the war, the utilization of these resources also should be very diligently. You have to use it, because once you use everything, then you will be at risk. That is why you have to have multiple strategies to analyze the your path as well as the opponent path. And critical path is a statistical technique of a project management that manage well-defined activity. Well-defined activity means what I said. If you are starting a company, you know how much time it requires, right? Plus or minus, it's okay. But in the case of military operation, you do not know what step the other person will do, right? So that is why in the case of military operation, project evaluation, because three situation, probably he might have more, or he might have finished all the resources, or most likely he'll be having the same resources as we are having, right? In that given situation, you have to take decision. But here you are sure. It is uncertain in the case of PERT, and here PERT in the case of CPM, it is defined, it is certain. And what it is a techniques of planning and control, right? Control of time alone, time alone. But in the case of CPM, it is cost and time. Critical path requires, because you are looking at not only the time, you have to look at the cost also. Because if you are waiting, if you want to finish the licensing earlier time, you have to pay so much of money. As a beginner, as you are starting the company, if you are spending so much money for incorporation only, it becomes a burdensome. It becomes a burdensome. And then orientation, it is event based. That is, I told you that it is event means each project, each event, each step that you take during the war, in the workplace, that matters. But in the case of CPM, it is activity. It is based on the each activity, that is licensing, and then documentation, like that. Each activity based evolution, it is evolved as a research and development project, because you are doing the research of how your opponent will react to your your response, right? And then it is evolved as a construction project. Construction, it is mainly started from the construction project, because construction project, first you have to get the approval, plant approval, right? First you have to get the plant approval. After getting the plant approval, what you have to do? You have to start your work. You have to start your work. And the next one here, model, it is a probabilistic model. What is a probabilistic model? Because it is uncertain, you work it as a probability and standard deviation, you do it. But in the case of CPM, it is deterministic. Deterministic means what? You know for sure how much time it requires, so it is already determined. It focuses only on the time, as we have already discussed. It is only on time. It is cost and the time, right? It is same point here they are repeating. Appropriate by high precision time estimate, right? In the war, you have to decide precisely, you have to decide, right? A facade, you cannot do it. But here, reasonable time, it's okay. You don't do exact time calculation, but reasonable time calculation also, it's okay. Management of unpredictable event, you cannot predict, because it is uncertain, unpredictable. These are certain event, defined event, you can predict it. You can predict it to some extent, you can predict it. And then job, nature of job, non-repetitive. Why non-repetitive? Your activities, as you are doing the research of your opponent also will do the research for you, right? Research of your activities. In that situation, what will happen? Whatever strategy you are taking today might not work tomorrow, might not work to the other opponent. But in the case of CPM, it works well. See, imagine a situation that you are doing a business. You are at the time of starting, no, it requires you. Somebody say that it will take 3 months time, but it become 4 months. So when you are starting another business in another state or another district, you will plan with the 4 month, not 3 months. So when it is repetitive in nature, these errors can be corrected, but here it is not. It is not. And then critical and non-critical activities, you cannot differentiate, because uncertain. You do not know, so you cannot differentiate between the critical and non-critical event. But in the case of critical path analysis, you can differentiate. How you can differentiate? Because the path which has multiple paths, Now you look at this path, we have 1, 2, 3, 4, 5, 6, and 7. So what are the path we have? 1, 2, 3, 6, 7, 1, 2, 3, 6, 7, and 1, 4, 3, 6, 7, 1, 4, 5, 6, 7. There are three paths. There are three paths. So each path can be differentiated. Each path can be differentiated. If you look at it, let me differentiate the color. Now look at it. These, there is one path, there is another path here, and the third path goes this. So you can differentiate between the path, but here you cannot differentiate. You cannot differentiate because it is during the war. And suitable research and development, non-research projects like civil construction, shipbuilding, right, starting up a business, etc., can be brought in. Now you take with this, we will conclude today's session, because this is also important. Sometimes they ask you in the case studies, right? Case studies can be given using the network techniques. Now you look at it, they've given this chart. Don't look at the answer. Now let us discuss the question. What is the question they've given? They have given A is an activity which is not depending, B is a event which is not depending. That means there is a A event independent, B event independent. Independent means what? It requires 5 days. B event requires 1 day minimum. After this only you are going to do what? You are going to start. C event is based on the A event, right? So that means C event, how many days it requires? 2 days. So to start C event, how many days you have to wait? You have to wait for how many days? 5 days. And similarly for D event, again you need to wait for how many days? 3 days. For D event, you need 5 days. For to start C event and D event, you need to have 5 days. So these two events are depending on event A. But whereas A event is not depending on any event. Is not depending on any events. But D and C is depending on A. That is why they're given. So when you are putting a chart, you have to see whether they are independent or non-independent. You have a paper called research, what you call operational technique or operation management. You will study in detail the same chapter, which is only for example I'm giving this, right? Detail you will study there. And similarly, if you put the chart like this, they have given their time period, right? 2, 3, again 2. H event, right? So F, D, E. E event requires how many days? 2 days. F event requires 3 days. And then G event requires 4 days, 3 and 4, and H event requires 2, I event requires 1, and J event requires 1. Now you look at it. Now you look at the critical path. Calculate the critical path. What are the critical path you have? Now look at the critical path. A, D, G, J. Second one is A, C, F, J. Then A, E, H, I, J. And the next one is B, H, I, J. Now all the paths we have, 4 paths we have, right? This is 1, 2, 3, and 4 paths we have. These 4 paths, we know the timing also. Now you look at the timing, 5, 3, 4, 1, 13 days it requires, right? 13 weeks. Here it requires 11 weeks, 5 weeks. In this, which is having the highest time consuming is this path A, D, G, J. So this path is considered as a critical path. What is a critical path? The path which is having the maximum time consuming path is considered as a critical path. Are you able to follow this one? Could you follow this one? So basically, this critical path techniques are helpful. Critical path techniques or network diagrams are helpful to study the, to analyze the paths. Each path as a critical. Each path is considered as a critical depending on the time consumption. Because See, when you are starting a business, you take a simple example of your, assume that you are preparing for the examination. You are preparing for the examination, right? Now we are in November, mid of November. Now, when is your exam? December. Assume that your exam is in December. So November to December, you have 45 days. Imagine you have 45 days. When you are preparing, it comes to 55 days. Is it good? No, it is not good, because extra 10 days you won't be able to complete the syllabus, and when you go for the examination, it is risky. So you have to plan in such a way how you can do the preparation within 45 days. So there is a shortcut. What is the shortcut? Alternative, you can attend the personal contact program, PCP classes, right? During the PCP classes, they will elaborate the sessions in a short way, or you can also post your questions. You can post your question what based on the doubt that you have, based on the preparation, that also you can do. So that is what here they are calling it as, whatever subject which take maximum time for preparation, that is considered as a critical subject. So that means you have to pay a little more attention in the subject. Similarly, when you are doing any activity, if that activity requires additional time, what you have to do? You have to pay a little more attention to that, how to reduce the timing, or complete the time as estimated without further delay. So these kind of activity can be done in the network analysis or network technique under critical path analysis. Could you follow up to this?
Yes, sir.
Okay, so see you next week. See you, bye.
Bye, sir.
Good afternoon, students.
Good afternoon, ma'am.
Good afternoon.
Okay, last session of today's class, last subject, operations management. Operations management. So, what idea you have relating to operations management? So, what is this subject for? Any idea?
For production.
Production. If you have any doubt, you can ask at the end of the class. For today's class, please adjust. I will be taking class with your notes available. Then next week onwards, we'll have PPT presentation. So, operations management is your subject which will be related to conversion process. So, can you see the screen?
Yes, ma'am.
So, what is operations management? So can you read Introduction to Operations Management? Is it visible?
Yes, ma'am.
It is not
Ma'am, it's
possible.
visible, but
Yeah.
the screen is quite small and it's very difficult to read it.
Please try to zoom in your screen. Can you zoom or this is okay? Is it okay now?
Ma'am, we will zoom in from our side.
Okay, then it's okay. So you please zoom in your screen. So operations management, previously it was production management, and now it is transferred to operations management. So basically operations management will be relating to conversion process. What is conversion process? Converting your raw materials into finished product. Basically, previously we have been concentrating only on your manufacturing side, but when you look into your business nowadays is concentrating both on production as well as service sector. So service sector is also getting more and more important, and it's developing comparatively more when it is compared to production industry. So operations management, we have to know relating to all these terms. So product, plants. So product is the product what it is produced by the manufacturer. So product will be varying from one person to other person, one company to the other company. Product will not be the same. And when you are relating to your product, you should consider normally being a manufacturer, we should stick on to the quality of your product. If there is no quality, there is no customer. So nowadays everybody is ready to spend more money, but they want quality product. They doesn't want to sacrifice in their quality. So everybody will be accepting this. So product is very important for every entrepreneur who's doing business. A service is also a product for an entrepreneur if he's running a service industry. So basically, when you say operations management will be only the process referred to the conversion process of raw materials to finished products. So when you say the plant, what is a plant? Plant is nothing but any kind which is needed for any business. So plant and machinery also you can say it is fixed assets, and it may be short-term assets also, but usually it is relating to the plant, but be considering the following: future demand, what are the design and layout of the factory you want, product, all these terms we'll be discussing in detail. So just an introduction here. Then productivity and reliability. What is productivity? Is productivity and production is same? If it is an interactive class, it will be interesting. Otherwise, it will be a normal
No,
theoretical class.
both are not same.
So both are not same. Production and productivity is completely different. Production is the number of products what you are producing. Productivity will be the ratio between the input and the output. So it will be output divided by the inputs. Output will be the finished product, input will be the raw material. So combination will be considered in productivity. So in plant, we'll be considering productivity and reliability of the equipment. So reliability is very important. What kind of confidence you keep on equipment? So equipment is what are the various technology-based equipments you are following for manufacturing a product? Cost of maintenance, health and safety, then environmental issues. So all these things should be considered under plant. Then the third one is your process. So process is nothing but the way in which you are going to make your conversion process. So process of converting a raw material into your finished product. Again, process is not going to be the same for all products. Products from one product to the other product, process will be varying. But when you compare your process with your technology, if it is advanced technology, process will be magnified. It will be outdated technology, process will be less. So everyday technology finds out something new, and we are developing in all sides of your business. So technology also plays a very important role in process, production cost, safety, maintenance, all those things will be included in the process. And the next one is your programs. So programs is nothing but the way in which you are going to do your business. There is a pattern of doing a business, pattern of purchasing, pattern of making your cash flow. So we all know cash flow will be divided into two. One is your inflow and outflow of cash. Inflow of cash is the receipts and outflow of cash is your payment. So that should also be considered here. Depending upon the flow of cash, the programs will also vary. They need an availability of storage. So depending upon the place availability in every organization, then your programs might be changing from one product to the other product. Then the next one is the people. So people depends. There is people are very important to consider. So depending upon the availability of the people, you will consider your production process, whether we can use technology-based production or non-technology-based production. So what is the wages and salaries to be paid? What is the safety and training? So if there is no safety and training for the employees will not like to work in your organization. Then work conditions, leadership and motivation, unionization and communication. So these are the things we have to consider under people. So people is very important in operating there is in the conversion process of raw materials into finished products. So what is the evaluation of operations management? That's what I was saying. It was previously personnel management was now it is transferred to HR management. So likewise, production management has been transferred to operations management because of so many changes in the industries and business, the policies, whatever we are following. So when you are considering the changes around us, there is a change in the production process of the programs followed by every company. So every time technology develops, production process changes, product need and wants of consumers also changes. So all the changes that is happening in the environment makes us to change in the production department. So that is the reason why production management has been transferred to operations management. So what are the operations performance objectives? So why we have to concentrate one mainly on operations performance. So it depends upon all these things. So customers, suppliers, shareholders, employees, and society. So what are the various points which gives importance to operations? So customers, we have to give importance to our customer. So if customers' needs and wants is not given important by the manufacturer, then they will become some others company's customers. So what is the difference between a customer and a consumer?
Consumer is those who are using the product.
Yes. Customer.
Those who are buying.
So customers can also be a consumer. Those who are buying the product, they can be a retailer also. But consumers will be the final person who is going to consume the product. So without customers, we cannot do any business. So we are manufacturing the product only for the usage of the customers. So we have to give importance to the customers. So giving importance to the customers, normally you should have seen in the business world, they'll be doing marketing research. So marketing research, why it is done? So every company nowadays, it is compulsory to have R&D department. So what is the purpose of having R&D department? They'll be doing research and finding out what the customer wants and the needs of the customers has to be satisfied. So without customers, there is no product. So you have to give importance to the customers. That is why one main important objective of operations management is give importance to the people. There is know about your people, then they'll know about your product. The second one is operations relating to the suppliers. So suppliers, normally we all know a supplier is a person who's going to supply raw materials. What kind of rules and regulations we have to follow for suppliers? If you throw money, they'll be supplying the raw materials?
No.
So no, that is not possible. So what we have to do for suppliers? We should also give importance to supplier. So supplier will give importance. So logically speaking, what we have to do is, so we all will not like to stop production. When we will like to stop production? If there is no production, there is no business. We all know. So unless otherwise there is a no emergency, we will never stop production. There is during only the off time. That is, if it is after factory hours, we'll be stopping it. But during factory hours, no entrepreneur will be liking to stop production of your product. So normally, when you are choosing a supplier, you should choose the right supplier for the right product. So what is the logic behind choosing the right supplier is, normally when you are selecting a supplier, you should not select only one supplier for supplying raw materials. Why?
Yes, ma'am. We have to choose
Or
multiple vendors.
alternative.
Yes, you should have alternatives. Alternatives will be optional. Why? Because if one is not supplying the raw materials, we can have the other alternatives. In case we have only one supplier, if he has not supplied the raw materials, the complete production process will be stopped. Why? Because there is no availability of raw materials to start production. So to avoid this kind of situation, we should be selecting the right supplier who is not creating any problem for supplying raw materials for your production process. So we have to depend on the right supplier for your production product process not to be stopped. So we have to follow that. Third one is shareholders. So shareholders will be always investing in your company. So when there is no benefits from the company in which they have invested, they will not be the shareholder. So clearly speaking, there should not be any stop in production process. Business should be continued. Business should be manufacturing the product, sent to the market for sale, and obviously after sales, the product should be there is a money should be returned. So when production process is properly carried out, obviously the prospective investors will become the investors of your company. So you should also concentrate on your supplier. Shareholders are the person who's concentrating on the development of the organization by investing their hard-earned money in your organization. The fourth one is your employees.
Ma'am, what is the difference between shareholder and stakeholder?
Stakeholders and shareholders, there is whoever has got the rights in the organization, they'll be called as the stakeholders, and there is who's got the majority will be stakeholders. But shareholders, when you're speaking, who will become a shareholder?
Those who buy shares.
So those who are willing to buy. So those who are willing to buy, you should make them to buy your shares. Based upon the product they will be buying. Why it is relating with the product? For example, if I have invested in Reliance, why I have not invested in any other company?
Yeah.
What will be
Based on the
Based on your
performance.
based upon the performance of the product. So we will
Yes.
always compare company to company, but when you're comparing companies, we are comparing only their product. Suddenly, if you look into the market, if there is no quality in the product, share market will go down. So it is only the product, it is only the customers. What happens to shareholders? You might have a question, but shareholders have invested their money based upon the reliability of the company, that is goodwill of the company. So we have to consider very important place to be given to the shareholders. If they withdraw their money, you will not have capital for doing a business continuously. So what I mean is, if they withdraw means if they sell your company shares in the market. So obviously there will be some fluctuations in your company's share value. So that should not be affecting your company's activities. So when you are doing a production process, you should also concentrate on your shareholders. Shareholders should not leave the hope on your company. The fourth one is your employees. Why we have to concentrate on employees? Who's an employee for an organization? What kind of employees you like to work in the organization? For example, if you do business. Or
Efficient.
efficient. See, nowadays, even if you have robots, we'll never like to have more robots in the place of human beings. Robots can be one or two, but not all activities what a human being does cannot be done by robot. Even if you are interested, we all are not wealthy to install robots in the place of human beings. So employees are very important in an organization. We always like to have skilled employees, not have unskilled employees. Reason for having skilled employees is they will not waste much. So if there is no wastage or if there is less wastage, obviously your profit will be increasing and your cost of production will be going down. So employees have to be given importance. So if the general working condition provided to the employees is not proper, they will not work in the same business environment. So employees should be given proper environment, so proper ventilation, all those things should be provided so that they'll be continuously doing the operation. There is production process and the product will be going out to the market on time. The next factor relating to your operations management performance is society. So society is a very important factor which depends, which fixes your economic condition. So society is where you are going to satisfy the need of the customer. Society means employees comes from the society, customers comes from the society, entrepreneur comes from the society. Everybody belongs to society. So society in a large scale, we have to create a better impact for your activity. So all the operations activities has to be managed properly so that you have to fulfill all the expectations what the society keeps on your product or keeps on your company. Both should be satisfied. The next one is your quality. So quality, that is all these things will be depending on your 5 performance objectives. So 5 performance objectives, one main thing is quality. What is the importance for quality? What we have to follow? If there is no quality, there is no customers. If there is no customers, there is no company. So if there is no customers, there is no company, there is no future for the entrepreneur. So that is why here quality, what it speaks is when you are involved in operations management, give importance to quality of finished product. Is it right? You have to give quality only to the finished product or even to the raw materials.
From the raw material.
So you have to start from the initial stage of buying the raw materials and it should be followed till you are converting your product into finished goods and it is sold in the market. But when you are sticking on to the quality, it is not only the quality of raw materials and the product, it is also the quality of everything what we do. Everything means quality employees, quality machine, quality spare parts, quality tools. So for example, if you're saying a screw, which is used in the machine. Can we use unquality screw in the machine?
No, ma'am.
So it is not possible. What we should not do is, even if it is very costless, we should not concentrate on that. So maintain quality in each and every activity what we do, that will be giving a good output. That good output will be calling us quality goods. So quality product, that is what expected from every consumers and customers. So that should be satisfied by every organization when they are concentrating on the production process. The second one is your speed. So speed of response, what you get, the response from the external and the response from the internal. See, normally when you've learned your business environment, we divide your environment into two. One is your micro environment and macro environment. One is micro and macro. Otherwise, you can even categorize into controllable environment and uncontrollable environment. External environment, internal environment. So which is uncontrollable?
External
External or
environment.
internal? So
External.
external environment is uncontrollable. So it is outside your hands. So when it is outside your hands, for example, it is political condition, it is uncontrollable. Technology condition, it is uncontrollable. But when you go under your internal factors, for example, people working in the organization is controllable. So internally, whatever it's happened, employees are controllable, machines are controllable. So when you are doing your activities, the speed of response is very important. In what way you are responding? So in what way responding is production should be continued. Production should be manufacturing a product and on time, and it should be sent to the market on time. Why? Because if it is not sent to the market on time, customers will not wait in the market. They will buy some other product. So that is the way you are losing your customers to become customers of some other companies. So that is the reason why we have to concentrate on speed. Pick up the speed, follow the speed, don't change the speed from time to time, internally and externally. So when the speed is slow or when the speed is high, both will be affecting depending upon your activities, what you are doing. So cost reduction is also one related factor relating to internal effects of speed. So cost reduction. Why cost has to be reduced? If you reduce your cost, what will be more?
Profits.
So profit, not sale. Cost, if it is reduced, profit will be more. How cost can be reduced is depending upon maintaining quality in everything, buying quality from wholesalers, using only skilled employees, reducing expenditure, whether it is an indirect expenditure or a direct expenditure, all those things should be reduced, and you can reduce your cost of production. So cost of production, if it is minimized, you can increase your profit. So the third one after your speed is dependability. So
Excuse me,
dependability,
ma'am.
yes.
Ma'am, the material which you, on the screen is different from what we got, ma'am.
On the screen is different.
Yeah, we got operation management, some other books. The page numbers is not telling what it's on display.
Is it okay? I'll give you full PPT. This class we'll continue with this.
Okay,
But
ma'am.
all the topics will be the same only. The syllabus is same.
Done, ma'am. Topics are different. That's why I was asking.
No, I'm going according to the introduction of operations management. We have to know all these things.
Done, ma'am. Thank you.
So dependability relating to your operations management is, see, customers always wants the product they want. They will not buy what company gives. And the customer also wants the product on time. They will not be waiting for you. So what are the various problems which stops you in production process should be considered by the manufacturer. So what we have to know, we all know that, for example, if I'm starting my business, I cannot say as a dialogue that I'm started my business only for service. Why? Because everyone who has started business, they want profit. So why they want profit? Why entrepreneurs wants profit? Can we
Without
done?
profit, they cannot continue.
Like, yes, you want to continue your business, you want some amount extra in the next year, you want extra capital. So whenever the profit is more, we will be again reinvesting the profit in the business. Why? Because it is my business. So I should not withdraw the profit and I will be spending for personal things. So what is the thing you have to consider here is one important operations performance. If you want to have better operations performance, we should also concentrate on dependability. So dependability is given two things: external dependability and internal dependability. So both the dependability will be having an effect on the cost only. So external dependability is outside the organization, the internal dependability is inside the organization. So both the things an entrepreneur or an employer has to consider so that he is not going to make the cost to be increased. So whenever cost increases, you should always think that if cost increases, profit decreases. So profit decreases, can we increase the selling price?
Depends on the market.
It depends upon the market, but we cannot suddenly make the changes in the selling price. Why? Because the customers in the market will be comparing the competitor's price. So they want, that is, for example, if a pen is sold at 10 rupees, I cannot sell the same pen at 20 rupees or 30 rupees. Why? Because same quality, same model, everything, some of the competitors selling at 10 rupees. So they'll be questioning me why you are selling at 30 rupees. I cannot say my cost of production has gone up, so that is why I've increased the selling price. So at this time, what we can do as a competitor or as a seller, I have to sacrifice only my profit. So every customer are very sensitive. They'll be questioning. Even the price margin is differentiated from one company to the other company. So when you are knowing about a dependability, you should also consider dependability into two things: whether you are in what way you are dependable externally and internally. The next one is your flexibility. Flexibility. Why your organization activity should be flexible? For example, you should have seen in any place a normal showroom, a mobile, not a two-wheeler showroom is converted into a bank. How it is possible? Can I convert a jewelry shop into a two-wheeler showroom? A jewelry shop into a two-wheeler showroom. It's not possible. Why? Because there is no flexibility. What is flexibility? Common meaning for flexibility?
adapting to the
adapt in the
changes.
market.
Adapting to the changes, what is happening in the environment. So simply, and the flexibility is, it is fixed, it is stable. So we cannot make changes whenever you want immediately. So flexibility, when you are saying flexibility, any operations or any process or any activities, what you're doing in the business should make you to adopt flexibility. That is, I should be able to change whenever I want to change. So at one point they have given volume flexibility. What is volume flexibility? Volume flexibility is if I am producing 100 products, my company should permit me to produce only 200 products, 300 products. How it is possible? So how it is possible is this my question. It should be possible. That is what this point says. Flexibility. Every company should have flexibility in their operations. So we will see everything in detail. This is only an introduction here. So company should have environment in which it makes you to change. So for example, suddenly if you want to have an extra bedroom in your home and there is no vacant land in the ground floor, what we will be thinking? Will we all sell your own home and we will buy new land, new home? Or we will try to construct extra bedroom if there is no space in the land on the first floor? I think you're all listening. Or am I going fast? You want me
No,
to
ma'am, fine.
reduce the speed? Okay. See, volume flexibility is it should make you to increase your production. When I can increase my production, for example, I have only one printer. Can I make 1,000 printouts at a time?
No.
It's not possible. So what I should have made, I should have bought extra printers, which makes me or which allows me to take 1,000 printouts at a time. So that flexibility should be there. If I have only one printer, I have to say that I must be given extra time to take printouts. Why? Because it is not possible 1,000 printout the same continuously. Why? Because the printer will be getting heated and it will be stop in between. So you should be flexible. That is, your process should be making you to adopt that any changes, any things you want suddenly, that should be made. In that way, operation should be made. In that way, your organization should be started. So that's why I was asking, a jewelry shop cannot be converted into a two-wheeler showroom. Why? Because jewelry shops can be having 4 floors or 5 floors or 7 floors. But we cannot have that kind of two-wheeler showroom. So two-wheeler showroom, maximum ground floor and the first floor, not more than that. Why? Because transit of two-wheelers to the 7th floor, it's not possible. So that is the way you have to think when you're starting a business. Your production process should be allowing you to be flexible as making changes. That is, you have to adopt to the changes what is happening around your organization or around your business. So that is a thing which will be helpful in your operations management is flexibility. The next one is your cost. So cost, normally we will divide your cost into two, fixed cost and variable cost. Why it is divided into two? Cost structure should be always planned properly. Cost is reduced, profit will be improved. And normally when you say cost must be reduced, that is not reduction in cost, that is control of cost. So normally when you have learned about accounting, what is the purpose of having accounting? Do you have financial accounting or advanced accounting? I think you should have had. Accounting paper. What is accounting? What is accounting? Why we should have accounting? See, accounting normally it's divided into three. One is financial, three types of accounting we have. So three branches of accounting: financial accounting, cost accounting, and What is the third one? Third one is management accounting. You'll have these subjects later on in the later semesters. So management accounting, cost accounting, and financial accounting. Financial accounting will be helpful for knowing the financial position of an organization. Management accounting will be the that part of accounting which will be helpful for decision making. So cost accounting will be helpful for two things. One is control of cost and ascertainment of cost. So control of cost is reduce the cost of production, profit will be increasing. Ascertainment of cost is fixing the price of the product. So cost plus profit is equal to selling price. That cost will be decided in cost accounting. So they will be preparing a cost sheet explaining all the expenditure which have been incurred in manufacturing a product plus profit that is equal to selling price. So that is various things you have to consider here. So cost should be considered mostly by the organization. Why? Because if there is no control of cost, everything will be going out of the control of the organization. So if it goes out of control, you will not be, you will be saying that your organization is out of control and you are not working effectively with the performance of the organization. So costs must be kept under control. So reduction of cost is a very important task to be carried out by every owner of the organization. The next one is the role of operations management. So what is the role of operations management? Is operations management normally it will be relating or it will be helpful for management of activities of your business. So managing how to do business, where to start, where to end, what are the things you are going to buy, what kind of capacity planning you have to do. So operations management will be having all these things, whatever I'm telling, that is where to select a location, what will be a plant layout, what is a work study, method study, and what in what way you're going to do your inventory control, materials management. So many topics will be concentrated in your operations management. Is operations management will be concentrated on the three functions here. So that is given as one is your operations, finance, and marketing. So operations is conversion process, finance is making availability for doing a business. What is marketing? What is marketing? What is marketing and what is market?
Management of
Management of marketing.
To sell the product.
management of outputs.
Managing the output.
Outputs of
Sell the product.
yeah.
Then what is market? See, market is a
It's an
place.
open source.
Market is a
Yes, ma'am.
place. So it is a place where a buyer and a seller will be meeting. So seller will come with their product, buyer will go for buying the product by giving a cash. So market is only the place where the buyer and the seller will be meeting. But marketing is those techniques which is applied by organization for making a product to be sold in more number. So when you do marketing, marketing is also one function overlapping with your finance and your operations. So operations will be manufacturing the product. Finance will be provided for manufacturing the product, and after manufacturing the product, it must be compulsorily sold by the manufacturer. So you are making your product to be sold in the market. That is called as marketing. So marketing simply it is a technique which will be used for making a product to be sold in more number in the market. So that is the three major functions every organization will be doing. So role of operations management will be making your product more available in the market, and that will be sold in the market, means again you'll be getting money for continuing its operations again and again. So finance and operations management, it is overlapping. So without finance, we cannot produce. Without marketing, we cannot improve your sales. So some companies doesn't need marketing. Why? Some companies doesn't need advertising about their product. They will not advertise about their product by themselves. It is not required. But some companies, it is compulsory. Any reasons for that?
Brand value.
What value?
Demand.
Demand.
Brand value.
Brand value.
So if there is demand, there is no marketing. See, if if you have already branded, if you are known to every person in the market, every customers, consumers, public, everybody knows. Example, if you use the term Tata Reliance, everybody knows. So they have already established their brand name. They have got their own name in the market. So those companies, unless otherwise if it is not required, there is no marketing. Whatever the products they are coming out in the market, they'll be that product will be bought by the customers. With certain products, if it is new, if it is risk, and if nobody knows about your product, compulsory you have to go for marketing. But marketing needs extra thing. One extra things we have to concentrate, that is, you have to spend extra money. So the initial years, if you are ready to spend more money, you can go for concentrating on the marketing. So money has to be spent extra compared to the other expenditure. So if any companies is not having extra money for concentration of marketing, they will not off in the beginning. But later on, to increase the demand, there is no other go. They have to spend for marketing expenditure by the particular organization. So when you look into this, marketing focuses on selling and promoting the goods. So all those points only I've been telling, to increase your demand, to make your changes in the market. So all those things has to be done in your marketing activities. So overlapping of operations, marketing, and your finance is very important for making your production process to be completed on time. So operations interface with a number of supporting functions. So what are the various functions in which the companies has got relation, that is your operations has got connectivity. It has got connectivity with HR, management information system, then accounting, legal, and public relations. So these are the various interfaces what the organization, that is operations, has got. So we have to see one by one. So practical, that is public relations. Public relations is you should always have a proper relationship with the public. Who is the public? The present buyer or the future buyer? The present consumers you have to make the present consumers to be the future consumers also. So what we have to do is, public relations is very important. So public relating officer, every company sometimes they have PRO. So what is the duty of PRO? To make your public to know about your product. So that should be done by public relations. Then HR, human beings is related with the employment of your organization. So HR, human beings, what kind of things will be concentrated in HR? You have one subject of HR management. So human resources, they are the resources. Why? Because why they are called as resources is, without human beings there is nothing. So why we have to concentrate on human resources is, they are the employees who's working for your organization. They might be directly linked with your raw materials, or they might be using your machines, switching on and off your machine, or they might be working with your computers, or they might be working with the biometric system. Whatever it is, every employee who's working for the development of organization are very important for the growth of the organization. So we have to concentrate on human resource for making operations effectively and efficiently. The third one is MIS. We can have as two things here: management information system, and also it is marketing information system. So both the things are very important. For operations, we want only marketing information system. So when you are operations, what is operations? Conversion process. What is conversion process? Converting a raw material into finished product. Why we are converting? We want final product to be sold in the market. So for making a product available in the market, we have to consider here marketing information system. How we are going to market this product into the market. So how we are going to make availability of this product into the market. So how we are making your customers to know about the product. So that should be concentrated by MIS. And the next one is accounting. So what is accounting? Accounting is the process of recording, classifying, summarizing all business transactions in money terms, and later on it is going to interpret the results. So that is what called as accounting. Why accounting has to be concentrated in operations is, only accounting is that department which will be concentrating on accountability of the money what you have spent, whether I have spent the right money for the right production, or I have spent the right money for producing the right product, and whatever the money I have invested, it will be received back. So that is why I said it is recording, classifying, and summarizing all business transaction and events in a Normally, when you say accounting, it is systematic process. So it will be a document where you are going to record a debit and credit, and finally you will find out what is the balance, so that we will find out whether you will be earning profit or you will not be earning profit. So you'll be earning profit or incurring a loss. That will be founded by this operations, that is making your accounting effectively. The next one is legal. So legal is relating to law. Whether you're doing a business in a large scale or in a small scale, everybody knows your business should be a legal action. So there should not be any illegal activities. And even if you have any legal dispute, sometimes customers and the company, sometimes company and the supplier, sometimes company and the financier, sometimes it happens. Some misunderstanding will be there and they'll be having a fight and they'll be going to the court. So our company lawyer should be going and dealing with the case. So legal activities will be there. So when you're treating everything legally, you should always be careful that this legal case should not affect the name of the organization. So that is why legal activities should also support your operations manual. So these are the 5 other functions will be supporting with your operations. One is legal, public relation, HR, then marketing information system and accounting. So here I have told you management information system or marketing. So I'll have add this also. Management information system is every organization should always get information about the management. So management should be providing information to all the departments for making a process to be effectively continuing in the production. So information, we all know information, right information at the right time. So management information system, management is the highest. Above that we have administrator. So management should be providing right information to the right department at the right time. The next one is role and responsibility of a production manager, that is operations management. So what are the various roles played by an operation manager? So operation manager will be playing a very important role. Why? Because he is the full responsible person which will be in charge of converting your raw materials into production process. So every operation activities has to be concentrated, like aggregate planning, capacity planning, inventory schedule. So all those things you'll see in detail. So production manager should know about all these things. So operations manager will be responsible for managing all activities in pursuing all business activities without certain hindrances there. So when you are making your employees to work effectively, operations manager's responsibility will be to manage human beings, asset management and cash management. So that is what HR management he has to be very responsible. HR management is appointment of a right person at the right time, giving right work to the right person, giving right work at the right time, making the person to work for actual working hours of organization. All these things should also come under the head of the operations manager. So operation manager will also be called as an operation manager, will be HR manager. Second one is asset management. So asset management, normally we all know assets will be divided into 2. One is a fixed asset and the other one is current asset. So here operations manager should also be an asset manager. So you should know how to uh, record transactions relating to all the assets what we own. So assets are nothing but all the properties or all the other things what it is owned by the organization. So even the raw materials which is semi-finished or work in progress product, that is also an asset. Why? Because it's a stock. The stock normally we will classify into 3. One is raw materials, work in progress and finished good. So this is also under the control of the operations management. He should also act as an asset manager. The third one is cash manager, CEO or CFO of every organization. So nowadays manager name has been transferred and it is used as CFO, COO, CMO, and CEO. All those things are the terms, but it means only the manager role. All these executive officers are going to play. The cash manager, which is played by the operation manager, he has to take care of management of cash properly so that cash comes inside and cash goes outside properly. So logically speaking, receipts and payments should be always concentrated by the operation manager being a cash manager in the same organization. So these are the various very important 3 roles played by the operations manager. Then some of the questions that arises in operations and production management problems. So production and operations management, it is very important division of every organization. Without production or without service, there is no activities at all in every organization. So some of the problems we face in every organization is design and specification of goods. So what kind of product we are going to plan? What is the location layout? What is the difference between layout and location? Any idea? What is location and what is layout?
Layout is a pre-planned. I mean, it's a planned one.
Planned about
Future construction or future
future
layout.
construction. Okay. Location.
Location is the place where it's manufacturing. The
So
plant.
location is the place
The
where
plant
you're
is
going to
situated.
start your factory or your office. Location, for example, if I'm saying Mumbai or Pune or Pondicherry, that is location. And in location, we have to go along with that. In that, it's whether it is in north or south or east or west. And layout is nothing but the blueprint in which you are going to have your factory. So blueprint, why we always have a blueprint of your home at the time of construction is where to keep which one. So where your kitchen should be, where your hall should be, where your dining. So all those places which we decided in the layout. Layout is the structure in which you're going to have your factory. Location is a place where you're going to start your factory. So that is also a problem. Determination of capacity and capability. So these are the various areas operations management will be concentrating. Why? Because that creates maximum problems. So problems in the area of operation is planning and scheduling of activities, stock control, quality control. So all these problems are always faced. So we will be discussing all these problems as one on topic setting in the coming chapters. So that is the various problems we always face in operations and production management. The next one is process planning. So process, what is process? We have already seen what is the process is, how you are going to make your planning or design come into reality. So production process planning. Process planning always it depends upon the production and operation process. So what we have to do is we have to design your process or in how many steps we have to manufacture your product, whether it is in 5 steps or 10 steps. So that has to be concentrated in process planning. You have to design your process. So for example, if I am using technology process or man-made process, which will be finishing the task very early.
Technology.
So technology based will be finishing the task, but man-made will be finishing the task, but it will be taking some time. Why? Because technology means we are using only machines. So depending upon what kind of activities we have to design a process planning. So we have to identify what are the activities we have in production, and relating to that, what are the various infrastructure facilities we have in the organization. So that should also be decided. Some some companies will have extra infrastructure, some companies will not have. So depending upon that, we have to decide whether this process will be suitable or that process will be suitable. So depending upon the process planning, we will be deciding the process planning on the basis of the following heading. First one is job shop. So what is job shop? What is various things? So we'll be using this term job costing, batch costing. What is job? What is batch? Have you heard this term? See, job shop and batch. Batch will be producing products in batches. Job will be producing products not in batches, but it will be producing the product. For example, how it is different is, for example, I'm telling screws produced by an organization, 1,000 on the requirement of Mr. X. Screws they are produced. So when you say job shop, every time when they are producing the product, it will not be the same. Even if it is the business is producing screws, when I give this order, the screw size will be 5 inches. Next time if I give the order, the screw inches will be 2 inches. So every time the job will be given to the particular organization. Job is only production of screws, but the size and the quantity will be varying in job shop. But in batch flow, you will be manufacturing the same kind of product, but the batches will be quantity. What is called as batches is quantity of production. So same products will be produced, but the quantity of production will be changing from one time to the other time. The third one is mass production. Mass production is opposite to production in less number. Every time when you're producing, it will be producing only bulk products. So even you can say it is large scale production. So that is called as batch production. That is mass production. Why all these types we are discussing? Based upon all these headings, you can decide what is your production. That is process planning. What are the things you can, that is what are the various steps in which you have to complete your production process. So if it is mass production, it is going to produce only bulk quantity, not in less in number. The next one is continuous flow. Continuous flow is there is no stop in between your production process. So when you start and then the output finally comes as a finished product. So continuously the process will be, the machines will be run and there is no stop in between. In no way you can stop it. Continuously it will be continuing and finally you come out with your product as a final output. The next one is process production. So process production is produced in a various process. So conversion process, normally some products will be converted in 2 steps. Some products will be converted in by 10 steps. So process, whichever production has got more number of steps to convert your raw material into finished product will be considered under process production. So same thing again and again. So job production, batch production, mass production, all those things. So we have to consider about designing a process planning based upon what type of production process and what type of planning we have, whether we have mass or whether we have a process or batch or job. So depending upon that, you have to design your process planning. The next one is efficiency of the production process. So when you can say that my production process is efficient. So when normally when you're saying, when you're giving a quality product with quality raw materials, finished product will be quality. So your production process efficiently. So for efficiency of production process, we have to give more importance to productivity. So that's what I was telling. Production is different from productivity. Productivity is nothing but the ratio of output and input. So that is what called as productivity. It is a proportion between output and input. So when you're comparing with your output and can you compare output and input equally? Given input, check with the coming output. So no. So it is not possible. When I give 100, there is 100 bundles of cotton. I cannot count the same 100 bundles of thread. So that will not be matching. So what we have to do, we have to check whether your output is comparatively equal to the input given. So equal to the raw materials given, what kind of output you are getting out of your production process. That is what is called as productivity. So production is different. Production is the number of products what you produce. So in productivity, we have these 2 types. One is single factor productivity and second one is multi-factor productivity. Single factor is only one raw material. That is, it indicates a ratio of one resource. So only one output, only one input, and you have to consider the output as only single. So it can be goods or service. So single factor is considering only one factor. Multi-factor is it will be having many resources, and all resources has to be compulsorily used for your productivity. That is your production process. So that is called as multi-factor. So single factor and multi-factor productivity. So what is productivity? It is a comparison or ratio between your input and your output. That is called as productivity. The next one is plant location. So plant location is the place where you are going to start your manufacturing unit. So where is your place? So for example, if I am saying it is in Velramban, Pondicherry. So I have to select this address, whether I am going to do finally the business in this. So why we have to concentrate on plant location? Why it is so important? So importance, what is the need? If it is not selected properly, if it is not concentrated properly, everything will go. Whatever the money you have invested, that will be going wastage. That is one given here, wrong selection of the place. Once it is selected, once your factory is going to be constructed, when all ideas is implemented, decided, again you cannot change. Once you bought a land, if it is sold immediately, can you get the same price? Is it possible? I bought one land for 25 lakhs. After buying it, I found it is not suitable. Can I sell it and get same 25 lakhs immediately?
No.
No. Once it is bought, if you want to get, we can argue, but the reason is a land is the only one asset which has got appreciable value. But the rate what you are expecting, that will not be received immediately. You have to wait for that. Otherwise, if you want the money immediately, you have to sell less than 25 lakhs. So they will be asking for 22 lakhs or 20 lakhs. But I have invested 25 lakhs. So once it is bought, and again you cannot change your idea, so you cannot change location from one place to the other place, so you have to think for many times for selection of the plant location. So that is what that is very important. So what are the various analysis you have to make in plant location analysis? So these are the various points you have to consider. Demographic, it is all the factors relating to the people, that is population who are living in that area. What is their educational qualification? What is their background of income? Whether they come from high income group or middle income or low income? What is their education level? What kind of job they are performing? What is the standard of living of the people who are working? So all those factors has to be analyzed. Why? Because you are going to produce a product only for those people who are living around the particular area. So if no people are living, then there is no purpose of selecting the particular location. The second factor you have to consider is trade area location. So trade area analysis is you have to analyze whether this area will be optimum for chosen for doing the trade. So trade is buying and selling. So you should be able to buy the raw materials. You should be able to sell your raw materials, and your road transport, your vehicle carrying your raw materials or finished goods, that should be properly taken and received inside. And all those factors which is required for connecting your business to the other area should be properly connected. So all those things, without checking all those things, you should not buy a particular location. So before buying a land, you have to consider the second factor is you have to do trade area analysis. Third one, competitive analysis. So competitive analysis, analyze about your competitor. How many competitors are around you? In what way they are the competitor? Whether they are competitor of raw materials or competitor of finished products. So you have to compete with how many competitors. That has to be analyzed by your business. Then the fourth one is traffic analysis. So traffic analysis is you should know whether your place of doing a business is reachable, approachable, or it is hidden by so many vehicles, or more that the road is not broad and the vehicle cannot be transported properly. So traffic is whether the movable condition of the vehicles or the public is very easy to reach your organization. That should be concentrated in traffic analysis. Then the last one is site economics. So site economics, normally when we are speaking here, we will speak about near to the market or near to the raw materials. When you're choosing a location, whether it can be near to the market or near to the location. For example, if I'm saying I'm the manufacturer or I'm preparing dairy products, for example, if it is milk sweets, where my location should be, where my place of business should be. Are you listening?
Yes, ma'am.
So we will have site when one can be near to the market or near to the raw materials. If it is milk sweet, where should be my location?
The farm.
Near to the?
Near to the
Farm.
dairy.
So near to the market only my location should be. Even my raw materials are available far away from the market. I cannot choose my location near to the raw materials. Why? Because when I manufacture or prepare milk sweets, it takes time to reach to the market. So meantime, when you're storing in your godown, it will not be in a usable condition or eatable condition. So again, it will be made. So we all know when it is a dairy-based product, it has to be stored in a chill condition. So again, that chill condition cannot be exceeded more than storing your 8 days or 1 week. Why? Because it is a food item which is relating to the human beings. That is, health condition should not be affected. So site economics, physical facility should be available. Whether it is available, infrastructure is near to the market or raw material. So all those things should be considered for your choosing of location. So site location or site economics will be considering all the physical facilities which we want for our business. So that is why we have to do this analysis is find out whether it should be near to the market or near to the location. That is near to the market or near to the raw materials. That should have to be considered by every manufacturer. So with this, I'll stop today. We'll continue the balance thing in the next class. If you any doubts, you can have ask now. I've started with only introduction. Then we have started with plant location.